Back to business again. Ready to go back into the AMC and talk about the downside and maybe the upside. This is huge down. Maybe not huge back up. We'll see. Good afternoon. What's up, James? I like that name. Can we ELAB, please? Boriski. We go down some, we go up some. But you know, we always go to the right. I'm a little hyper. I had some coffee and some biscotti. They're like these tiny little biscotti. They're basically cookies. So they have a NASDAQ compliance news coming up. Oh no. Hang on a second. I lost it. No. Oh jeez. Oh no, please don't do this. No. This is gonna be gross. It's gone. Yeah, it's over. We just have chunky cookie coffee now. Dang it. That's the price you pay for being hyperactive. It was a biscotti, right? Biscotti. It's like a it probably is Italian. It's a really hard, fancy cookie, right? It's like a super short shortbread almost. They're made really differently. They use like, what is it? Like amaretto or something like that. I can't remember. But they use like something different in them, and to make them like more like firm. But I was dipping it in my coffee, and I just let it sit there too long. And it broke in half. And now it's like a droopy part of a cookie in the coffee. I took a spoon to it and got most of it out, but it was already too late. It was like disintegrating. Yeah, they're yummy, but you can't have them without something to drink because they're really dry. Yeah, it became a rehydrated cookie. That's right. If you try to eat it by itself, it's kind of like, yeah, like almost like a graham cracker or something. Like it's really dry. I had a crazy hour and a half. I was like running around, so now I'm all hyper. AMC options. Don't let it drop in the coffee. It's mushy and gross. Oh man, I hate it though. I hate having like cookie crumbs or something like that in my coffee. I'm not a fan of like anything chunky and something liquidy. I'm not talking about soup. That's different. Soup is like, you already know what you're getting into. But you know, like bubble teas and weird stuff like that. Or like tapioca pudding, that kind of stuff. I'm like, ugh. No, I don't like that. Soup's fine, because soup is soup, but now I'm upset because this coffee basically feels ruined to me. This is gross. It's like it looks like backwash when you see something like that in your coffee. You're like, oh, somebody just drank some of this and then stuff from their disgusting teeth fell out into it or something. Blah. It's a horrible thing to say, Booksy. Why would you say that? Not a fan of the Bloody Mary, I take it. I just don't like that kind of texture, I guess. I could do it with some stuff, but most things I'm like, nope. No, thank you. I wanted to look at GME first because when I came back, it had already made a pop. very recently. I really like the way I color my charts, but sometimes every now and then it could be a bit of a headache because this purple doesn't show up all the time in the wicks. I often use like yellow and green or gray, and I think that's a problem sometimes. So it's like what are you going on about color schemes? Well, that wick is hard to see, you know. Sneaky. But it goes all the way up to actually where I had expected it to go during regular trading hours. Did not expect necessarily last night that it would stop there. So when I had done my illustration yesterday, I think I left it like this or something. It was really crude, and I just had it like going up and then back down because I figured it'd pop and then drop, and then we'd decide what we were going to do. That's kind of what happened, but only if you have extended hours on. But then I had this marked off because I was thinking it was going to come up to this trend. Well, that's not true either, not completely. I had an idea in my head with GME that if it's going to recover, it's going to cross here and then cross up again. And so it would have to cross this little pocket, which is around $30. It's like $29.90 on my chart up to about $30.10. And that's a resistance from before. I mean, it was November 20th we hit it for the first time in a long time. We did camp above it, and then when you take notice of stuff like this, I mean, it's pretty obvious. You've been trading for a while, you guys know. Fruity Pebble blue milk. Nah, I'd rather just dump the Fruity Pebbles out. I like the crunchy stuff in the milk, but once it's like mushy, ugh. So this right here is 29.87, and I guess this is a little lower, like 29.80. But this is the level that when it broke to the upside, it tried to hold above it. Here, there is a bit of a, I guess that is used. I said it wasn't that important, but it is used. So let me zoom out a bit and see what that is. I think it comes from one of these early crosses, but I don't see any other great significance in it. Well, I suppose that would be like the main breakdown into the low portion. This would be like the high. So this would be like 1, 2 cat ear, and then you drop through. This is like the 50% drop, and then this is like the 1, 2, and then the breakout 1, 2. I still think we're on the breakout 1, 2. I don't think we've even finished it yet, so it's a weird chart. I guess it's debatable. You could say this is it, and then this is 1, 2. Maybe that's a better way to put it. This is all part of the same structure. Regardless, it comes from the middle of these cat ears over here, these like this hook. So I think it's important. And it is where we're interacting now. Again, as a matter of triangulation, maybe you consider it, okay? The reason I'm saying that is because presently we just bonked our heads on it and recently, and then we've got to do it again here at 30.80. And then there's a lower one that I think is just a trend. It's, I mean, you could call it like a creek or an ice or something level. It's like a support level coming up. It's beneath here as support, but it looks to me like it's sort of the first trend out of off the line, right? So if you're coming off of this breakout, this is the first place it finds support after jumping across. So I think there's only two possibilities for that trend, as I stated before. One would be the resistance versus the support, and the other would be the support versus the support. What about resistance versus resistance? Well, that's also one, but I wouldn't, that's like higher. That's going up to the upside above all this. So I wouldn't use that for support. But so, all right, so that being said, I think that's the one we probably just clipped. You know, actually, not to flip-flop like constantly here. I'm a little hyperactive. But I think that might be wrong because I think I took that. So I guess it's nothing. So yeah, the conclusion was that it's meaningless. That line is not being interacted with just yet. It's almost there. Almost. I would say it's close enough. I do think it is it is an important marker. Like this motion right here is how you break out. We talk about I'll get to ELAB again, but we talk about this motif a lot on my stream. It's one of the more common bottoms that you see, which is just a way of saying like, okay, it doesn't just appear on AMC, it appears maybe across the market. I'm not really sure what you would call it other than when you're looking at the wave, just calling it like a wave cross, But typically what we see is that if this is going to jump, this generates an M cross above whatever trend is here. So this is the one that it looks a little different because it's elevated. It's like rising, going upward, but it is the same as the one we talk about quite often. In some ways, this is much stronger than the one we talk about quite often. We've done this so many times that I think at this point, the 30 of you that are watching, you probably have been on this stream for long enough that you're aware of what this is, right? So this is like the shallow S-curve into a reaction, and then if it can hold, it should cross a creek that's generated here, and then another one with the second push. So there'll be two. So the first would be the reaction here. This would be the first creek cross. Again, a wave over, it holds, if it can hold support. And then simultaneously, you're doing like a sideways action usually here. And it might be that this is set up a little higher, a little lower, it's flexible. But this would be like roughly what it looks like. And then the last one would be, this would be an advancement over this bottom if it's going to advance. So it should come over this top. And ours did. It just came over that 29.83 mark. I'm not just doodling stuff. I really am charting. I'm trying to make a point here because if it comes above this resistance, which I marked off at 29.82, that's a good thing in a lot of ways because that means that it's trying to advance. It really may be more like 29.87. Hang on. I'm going to adjust it based on this top, not that bottom over there. I had done it towards the bottom over here, the top and bottom over here from this side, but I'm going to do it up on this point. I think this is better. Plus it hits here better anyways. Yeah, so 29.86, and see how this came back above that right there on that wick? So it's pushing resistance 2 times. So it's pushing up vertically, really 3 if you want to count the rising trend there as well. So there's a lot of checks right there. And then it's very significantly also pushing above the outermost creek here, which is these 2 peaks. It's pushing against that resistance. So there's a lot of positive pressure being placed right there on the positive pressure. You don't hear that very often. Being placed on, well, you do, but usually like only in certain places in your house. 30, yeah, about 30-10. So that push up right there signifies a desire to potentially advance. So then what needs to happen is you just have to come back and find that support. I really do think kind of the way that we drew it out is correct because I had it coming back down here, and it's what you would expect. Just in general, like I just know like what it should look like, but now I'm looking at this like, no, it's about right. Yeah, it should come right back down to this marker, which is kind of where I have it. I think that's more of an accident, but that's where you would want to see it hold. So if this can come back down and hold, then the next movement would be like a 50 cross of that creek. 50 maybe, where it comes back above whatever that high is, which we know it came up to 30.14. Hypothetically, in theory, like whatever you want to say, you could just advance, but in the best case scenarios, you would come back and check this first. So even though we don't have always that in mind, like, oh, it just could just go. I'm always talking about backups. It could, I just think that there's a typical way this usually breaks, and you would want to see it come back. And that would be your M cross up to the upside. Then I don't think you need to come all the way back. I don't necessarily think you have to come all the way back to retest 2984, but if I had to place it somewhere, it'd be there. Or slightly higher, maybe like 30.50 or something like that. So this is looking pretty good. GME is looking pretty good. And then the rest of it would have to be an advancement over the top. So the next wave may or may not go over the top. If it does come back and hits 28.39, the next wave may or may not come over the top. Typically, if it does, I'm kind of more bullish because I think it's pushing resistance. If it doesn't, I'm not necessarily bearish because it could be that it's waiting for an SOS here, like later. Like a sign of strength could come at a later time with a backup to the creek. We did note, however, that this works really neatly. This whole rotational theory that I drew out yesterday works really well with the downward trajectory here. Like, it's super solid for this one from the top. So I'm finding it to be a very good chart right now. I think this is going to be a pretty solid chart, which means we may see about 35% more upside before the end of the year if it continues. I mean, it's a big what if. Obviously, when you're thinking about earnings, you're kind of imagining that it's going to be this really huge deal. And so you probably are thinking like this is too slow. It really just depends. You know, when we went back and looked at some of the previous earnings, like they took about 20 days, you know, to raise up to their tops. When they broke back to the upside, some of them were ridiculously violent, like this one just rocketed up, right? But when we were looking at kind of in general, the more, I mean, I don't really know. There's not really a good standard for GME. I keep trying to make a standard for it, but it's not the best. Most of these, if they've gone up into earnings, they dump, and if they've gone down, you might get a pop. Some of them maybe extend a little bit, but they're very hard to judge because in the last few years, we really haven't had a lot of upside. So you're talking about, okay, well, yeah, it popped, but then it dropped later. Well, of course, because it's in a downtrend. You know, it's a tough place to be. You know, it's hard to think about it then, okay, does it have to do that? No, but that's where we're at. So it does look like a lot of time. At the same point, really what this would say is that maybe by the week of Christmas, you're already kind of advanced up to 40. That's kind of the bare minimum if you want to just go that way. So is ELAB ready to go? In May, when GME was 30, AMC was 5. GME now 30, AMC 4.4. Thank you, Adam Aaron. Well, yeah, but there's a big gap up here at 520 down to 5 or down to 480. It's a huge gap. So it may not be like following 1-to-1, which is what we want. And obviously you can't make it go when it's not ready to go, but I don't think it necessarily means that it's done. I said when I got back I'd look at this again. I'm going to look at it again, but kind of flipping through, trying to make sure I catch up with GME first since it's on its earnings after earnings day. And I think it's important to just kind of take it as far as we need to take it. So we're pushing 30 again. It doesn't seem like it wants to kind of back up, but I would suggest to you that this motif that we drew is correct. There should be some kind of an attempt to hold that support. It may very well be that it looks more accurate, so to speak, on something like RSI. Like, for example, if you were to push up even further here, maybe it comes back down to, just in theory, 2980s. You might see that reaction here on RSI, even though the price is not low like what I'm expecting it to come down here. Maybe the price is up higher. You don't get that pullback, and so then it happens up here. Well, it happened on RSI. So it's like, as long as somewhere this particular motif is happening, I wouldn't be like super concerned about the price action. Whether it pulls back here or it advances higher, which sometimes happens, and then pulls back here, it really doesn't matter. As long, again, I think as long as that motif on RSI holds up, then I think you're over that creek, and you should see it continue from there. Feels good to be up 11%. Maybe regardless. We know that during extended hours, it did hit 31. So it's possible that's kind of the target in mind for this upside. Again, we'll see. I'm just saying, like, in theory, I would put the M right here. Not higher. Let me check ELAB because I want to address it. You're asking if it's ready to go. Well, no. I think it's still pretty much the same. So I said there would be a potential buy-in right here, and I still stand by that. Like, this would have been a potential buy-in at 225. But there's a lot that could happen between now and like Friday where it just sort of chops here. And then if it breaks down, you're kind of in a bad position if you bought in right here, because you're like, well, yeah, I'm there for the rally back up to the gap. I would say right now, this playing the gap is smart. I mean, it doesn't seem like a bad play. However, I have to just kind of warn you, like, it's not over that creek. So, again, it's just kind of straightforward stuff. It broke down. It looks like it's trying to advance right here. Currently, there's an EMA on the 30-minute that it's interacting with at 230. But until it comes above like 237, 240, you're not out of that trend that was established, those two peaks. So there's a resistance coming down here. It's going to push towards the bottom of that gap. And if it can get above there and hold, then I think you're in a good spot potentially to just kind of keep going, you know. It's a decent trade. Not the biggest trade in the universe, but that's a 10% swing potentially. I would take that trade if it fits into your plan. Closed at 257, so it did close high. So it's got all the way up to 257, and then long story short is that 258 is the top of a very important supply zone. So I don't see why that would be an issue coming up there, at least for one move. However, after that point in time, I don't think there's much you could do. You're saying there's some kind of... You're off, and I'm like, where did you say this? Where did you say this? Hang on. Nibbling away at 220s for next way up. Yeah, basically. They have a NASDAQ compliance news coming up after hours or beginning of next week. Today is day 10, over $1. I'm not sure what kind of catalyst that would be. I don't normally trade something like that, so I don't know. Anyone aware of what that would look like? I wouldn't be surprised if it's Monday. I guess I'll just say that. Like, you could get this gap fill and then start working out sideways here. All right. Let's put some grease on this and really like dig in for a second, because my thought is that if this is bullish, okay, and it could be, my thought is if this is bullish, this pocket at some point should generate some interest for buyers. All right, if I didn't know anything about this and I was like, oh, I think it's possible it goes back up and blah, 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 but I think that it takes like a normal path to get there, then there's really only two spots. It's still the same. There's still only two spots that I would look at. One is here presently, It does like an M shape up here and then leaves by jumping over this creek. And then the other is that it walks down underneath 250 and then drops low. And I don't think it goes way down necessarily, but I think it's going to come back down to here because, yeah, that's right. Because this is a build out that's rising, but then you haven't come back and checked liquidity down low. Like this is what I'm trying to get at. And it would be odd to see it leave before hitting 2 again, if that's the case. And I think it is. So I would venture that there's a high probability it comes down to 190s if this breaks down right here on Friday or Monday. And then if it doesn't, then I think you could just go. It's that simple. I know it looks like, oh, it could go either way. Thanks, Booksy. Well, look, until things play out, I can't really tell what's going to happen with this RSI, except that it looks like a hook. And that's about as far as I could take it. You know, it looks like the RSI will be coming up to test that high again, maybe at 260. And then that would probably be the end of it for a moment, for at least a day or two. And then you're going to chill going into Friday at like 250. Monday, I think you're going to have a little bit more answers. But if the move already breaks this line by Friday, then I'm a little more bearish. If it stays above it, and especially if it crosses the creek here, which I don't think it would do before Monday, although I guess it's not impossible, then I'd be more bullish going into Monday. And by bearish, I don't mean long-term forever bearish. I just mean that's what I would expect. So I don't necessarily think it's a bad trade if you want to trade from, what, like I said, from like 230 up to 250. Like it could be a big trade, but I don't think it's wise to sort of say, oh, it's going to definitely continue after that. There's absolutely a possibility that this is going to come down low. And especially if it comes up high here and then it breaks down, you're going to have a new creek, like something like this, right? You'll have like a new creek out here if this pops up to that gap, and you're going to have to respect it. You guys are like, no, I don't. Disrespect it. That's why I think it's pretty important to just sort of monitor where this goes afterwards. And then I wouldn't go too crazy. This to me is not the trade to take. I would take the trade after it breaks out above this mark here. So potential buy-in on risk is what I was saying, is like you could buy in on the risk that it could come back down, but at least here you got a low price on that buy-in, and then it could build out and go up. That's why I was saying this would be the pullback to the low. Pretty spot on, but it's not, there's no confirmation until you get above that line. So it's a risk on kind of maneuver where you're just trying to buy a pullback. And the truth is, this could generate a much larger, longer term pullback. It could get quite ugly before it's done. This would be the next place that I would look. And then if it crosses up and over, I don't know, man. I think it could just rock it at that point. If it can hold this level, I think it could just go like really far. So we'll see. I hope that answers your question. He's not talking about AMC. Jumping ship. 10 minutes on AMC, lose 10 people. Every minute I don't talk about AMC, I lose one person. That's not good statistics. People don't like talking about anything else except AMC and GME. He's not talking about GME. I'm here for GME. I'll get to it. I already got to it. Technically, I already talked about GME, but so yeah, when you when you look at this, it would be reasonable to conclude that we could still have a breakdown and come back down to near 2850. If it comes above and it ends up going up to like 31, then we're really wanting to hold above 29.40. It's actually fairly straightforward in this case. That GME is looking fine right now. AMC, though it doesn't appear to be as healthy to many, could be just fine as well. It's dependent on sort of your outlook about what's going on here presently as the creeks go. I've been sort of back and forth on it. We may need to just kind of focus on, because I already know what it kind of looks like. We're just going to focus on the main chart here. And we already had these intersections drawn out. I'm going to go ahead and get rid of those lines because I don't want to keep the lines on the chart. I'm just going to keep those two pockets because I think those are potential target zones. And if you don't know where they come from, too bad, so sad. But they're there. So, yeah, I think they're pretty good targets. Straightforward as they come. What I wanted to do was try to go back, knowing what we know about AMC and how those trajectories often work, is try to go back and look at this from the perspective of a like kind of an inverted trajectory, and then also how you chart this bottom if you think it's going to form in that particular way. And not break down, which is the tough one. I guess the easy answer is like once it gets over 460, because this would be like confirmation, I think, right here. I'm pretty sure this is right. I won't speak any more heavily than that, but I think that I'm right about this. I think 461, 460 shelf as confirmation is probably your best bet here. And I think if it goes above that, you could be taken off to like 650 pretty quick. Like it won't give you a whole lot of time to get in that kind of fast. The reason I'm saying that is because these trajectories as we see them are straightforward enough, and they're giving us a lot of high velocity moves. So everything we've mapped on trajectories lately has been steeper and steeper and steeper. And that tells me there's a more and more extreme variable to it. Like the higher number is being targeted. So we're moving it really far. And there's a extreme desire to not let it run, obviously. But you can see that walkout very clearly. This looks like it's checking that main creek, and that's recapping everything we've already talked about. But this parallel structure was kind of the gold standard back in August that I used to enter the play. And what I did in 2022 was after it pushed up, I watched to see if it made a higher low. And if it made a higher low there, I basically just bought in. And that's what I did. And I bought in on the low like down here, which would be, again, pretty high risk now because you'd feel like you're on the edge of a cliff and you may not survive it. But that's where I bought in 2022. So, again, it's not really maybe like the easiest thing to talk about because you're like, well, that's a big risk, right? You could end up dropping through there and then you're gone. If you misread the situation, then it's over, right? But that's how I bought in. I mean, that's all there is to it. It is a high risk thing, you know. But it is what it is. So I will tell you that if it does something like this, I'm definitely very, very bullish. We see this kind of a move with the walkout, and I think it will take off. And everyone's gonna be like, "Oh my gosh, how did that happen?" Because of dilution. Right. But yeah, I venture that when we went through this right before I left, I said I was going to come back and work on it because it wasn't quite done. the target's there. I suppose what concerned me was the timing of it and the placement of the target. It was a little too steep right here, it's slightly off. It doesn't seem like a lot on my chart, but it's like 1, 2, 2.5 days to 3 days off. I'm just kind of curious. See, and this one's not very steep at all. This one's like, yeah, this one's different. This makes you feel like it may not even go that far beyond. Trying to think, like, what would I use? What would be the comparable level here to use? I think it would be this. It's where the creek jumps start happening. Not back here, even though you could do that. Technically, this is where the widening begins, and you start working your way out across the move. I guess I'm most nervous that we've already kind of gone. I guess that's my biggest most obvious concern is like we've already made that move, like it's already happened. But I keep finding plenty of evidence to suggest we didn't go far enough. So another thing we could do, maybe we should look at like big picture. Where did this like anchor itself? Because there were other things involved in this. Like I remember being a bit confused as to why it was stopping there. If you took away all the little details of what I did to get the number, I remember thinking like it didn't really make a lot of sense to me. Like, why did it stop there, you know? This is a weird place to stop. And I still, to this day, I'm not really sure. There wasn't a lot going on. Maybe 150 because it created that shelf. It's close. It's like really close to this shelf right here. I just barely approached it. So I mean, by comparison, the only thing I think I could compare it to would be this area to this area. I don't have anything else to go off of right here. There's just not enough information. There's some walk down levels, but it's the same levels. So I would think it's this. I would think it's 869. I mean, I hate to be my own best friend here in this case because it's like I'm just sitting here staring at it and I'm like, I don't know, what level would you pick? That is the level. It came back up to that mark and that would have been like near the bottom of that breakdown. So in theory, that might be a good place to target. And it works with what we've talked about. Here we go, Booksy. 869 again. Here we go. You brought it back somehow. It's relevant again. I don't know, man. I don't know why it kind of goes away and then comes back. It's one of those mysterious things. It's like a ghost or something, you know? I really couldn't tell you. It just sort of comes and goes. I want to note this before I go any further. So if you look at something like this, your immediate reaction is like, well, dang, man. So you're saying like it's going to go up to that and then just slide down forever and then just keep going down and down and down. No. That's not a good way to chart. I'm using this as a wave analysis. So I'm using this to determine like waveform pattern, how they set up, you know, what we might expect going forward. And I think when you do it that way, it's a lot less about what happened here in this past time frame when there was an ape introduction, right? There was a lot going on back then that was very different than what's now. As opposed to just, no, we're using it as what's going on in relation here, presently. We already know there's some interesting similarities to March. We already know there's some interesting similarities to 2020. So it's fine to, I think, to say, guys, look at where it's at too. Right now, guys, check it out, guys. Look at me. Look at where it's at though. It's right now. It's sitting right here at 438, which seems like this weird number. But check that level out on the big picture. Ooh. And then look at where that compares to where it ran when it broke down here. It's like back down. If we were thinking it's like similar in similar function, we're looking at this area here on the right side on the screen. It's like this initial walk-in zone right there. We're a little low on this comparison because this comparison came below it. It dived beneath that level though, didn't it? And then look at when it comes back up, it comes back above that level. That was when we had earnings and there was that big drop and then it just ran like 100% in like an hour. I remember thinking if you got in, you basically made like $1 bajillion or something right there. But like that's where it's coming back down to. It's coming back down to that little gold level. That was established as it entered this zone way back in January of that year, which is the exact same as we're seeing here, January of this year. That's where that is established. January 2022, and then this is way later, near August 2022. Obviously, that's already come and gone for us, but it's interesting to see that similarity in that walk down here. Now I'm curious. And then it's coming back to that top. Really similar to this one. Came back to this top. It's like the same chart. What are you trying to say, Booksy? We don't know. Then shut up, Booksy. I don't know. I guess I would go from normally I'd go from the top here, but there was a slight difference because this comes up above that point and this stayed way below it. Normally I go from the drop down, but I kind of wonder maybe I should just use the range right here as just a good average. And then the entry and exit are much the same, but what? Oh, they are, aren't they? If you go from where the gap originates, okay, that's interesting. It's a big picture, but what about a diamond though? You don't have a diamond structure here, do you? This is a completely different chart at this point. I would look like it'd take forever to get up here, like April. It's like complete opposite. But it wouldn't be there. Nope, it sure wouldn't be. It'd be back further. So the way I measured the breakout was not based on these creeks, these little like shallow guys. These were just there to illustrate like we walked out. I really measured the breakout from here, from the place at which it crossed like that threshold. That was based on a diamond structure that doesn't even look like it exists. You can see it visually if you look closely because there's a widening here and then it goes down and then there's a narrowing here. This is the basis for the reason why I did this. And it's a bizarre structure, but I thought that's technically a diamond because it's widening and then narrowing. And then it oddly had a build out that was quite nice. Can't believe I'm going to do this, but I think I need to do it again. You guys are like, I hate you, Booksy. Why do you do this to us? I got to do it. I got to see whether this adds up. I have to see it. I just have to. It's like a dog with a bone or something. You just gotta like keep going. I don't know what it is. I just gotta see it. It really looks similar because it's building out right here. Look at that jump on the creek. It's like building out right across it. I really, 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 really didn't want to draw this comparison particularly, but because I was like, nah, I don't want it to like be this breakdown thing. But I really think that's right. It's hard to tell unless you look carefully at this cross here. This is like a triple 1, 2, 3, and then when it jumps over, it starts a widening that's undeniable. And that's the moment that you start that widening build out. So it's a tough one because it doesn't quite look right at first. It looks like I'm just kind of putting that line wherever I feel like it. But I really think that's where it's supposed to be. And then I think this one's a little easier. It's like really clean. It's pretty obvious where it's supposed to be, you know. All we're really doing is trying to identify where this is on this chart. I don't think anything we've done so far has been particularly against that. All we've done is kind of reinforce it with different ideas. So what I want to do is whatever you're going to do, just do it, man. Nobody cares. You're the only one who stresses about this. I don't think anyone watching really cares that much. I'm going to keep it because I like that chart on the whole, but I'm going to erase a lot of it because I want to get it cleaned up. And I'm going to start looking at this a little bit more like as if I timed it wrong. I'm going to do it as if I timed it like this was we were thinking it was going to be like March, and we did that analysis earlier, but it didn't work out. It didn't break out like March. It didn't go right up. Instead, it's a lot more like August, which was, there was already a move. You kind of walk down as far as you're going to walk down, and there's a new move right here. This might be a golden comparison. Not at all worried about GME. I said I thought it might come back down. I think it's necessary, so don't freak out. Looks good. I'm freaking out, Booksy. I'm freaking out. I need your help. Oh my gosh, GME is coming down. It's dropped 1%. We're doomed. Get your life jackets on. Help, help. That's the reason why I don't reply to every comment, because like half the time my comments are just like absurd, like GME, AMC, dead. They're dead, man. They're dead. You're just poking a bear, a dead bear. It's already dead, man. It's dead. LMAO, LOL, this guy, he's never right. This thing's dead. It should be my own bots. I would be really good at being a bot, I think. Oh, he's dead. The market's dead. It's gone. It's crashing. Goodbye. Thank you very much. I'm fine. I'm fine. I'm fine. Really? You don't sound fine, Booksy. You sound demented. Like you're broken inside. Cue Sarah McLachlan music. Sad puppy dog tears. In the arms of the angels. Booksy died for the child. You guys are like, please don't quit your day job, Booksy. I'm sorry, I can't sing that high. Sarah McLachlan high. I don't even think that's the song. I don't even think that's the tune. I just made up a tune. All right. Enough chit-chat, Booksy. Get back to charting. Remember the last time you tried to be funny? You lost a subscriber. that guy. That was really funny. He was like, this ain't comedy. I was like, I'm just throwing some comedy in there. He's like, you think you're funny? It's not funny. Unsubscribe. I was like, all right. I was like, no, please. I need you. And was joking about Kramer going home to his wife, Margaret, which I don't even think is the name of his wife, but I was just joking about that. And he was like, this ain't funny, dude. And I was like, well, I'm just joking. So you need to chill. And he was like, well, it's not funny. Like, well, too bad. I don't think a lot of comedians are funny. My wife thinks they're hilarious. I think they're not funny at all. It happens. I didn't come here for a comedy show. I came here for serious talk about serious stocks in a serious stock market on a serious day at a serious time. Serious. I mean, you should be serious about your money, but I think beyond that, it's okay to joke. No jokes. Only charting. I don't pay you to joke, Booksy. You don't pay me at all. That's not the point, man. I don't pay you to joke. That's true. You don't pay me to joke. You don't pay me for anything. Which includes jokes. So stop joking and get back to business. All right. When is he going to chart again? That's what they're asking. When is he actually going to do something? This guy. Enough is enough, Booksy. They can only take so much. Whoop! Look at that. Did you just whoop? Yeah, I whooped. What of it? Whoop, there it is. Whoop, there it is. Whoop, there it is. Oh, I forgot how that even goes. Boots with the fur. The wrong song, man. Wrong era. All right, Booksy, you're stupid hyper. You really got to stop. I'm actually charting right now. I don't know if you guys noticed, but you're like, I noticed, Booksy. I've been following along. Yes, well done. You do not get any gold stickers here for following along. Why are you talking in my voice like that? I don't sound like that. Yes, you do. In my head, you sound like however I want you to sound. That's what you get for being in my head. What if... Here's the thing. We're not really offset here. We're not really offset enough to warrant going significantly lower than our expectations were before. The difference in this is this was really low, and I'm not seeing a case for that here. I suppose we could argue that, I don't know, again, it already made that jump. It's a tough one for me because I'm looking back. Everything's tough for you, Booksy. You're not really an intellectual, man. If you were an intellectual, everything would be easy for you. I don't know. I don't know why I said that. I need to stop. All right, so seriously, stop, Booksy. Stop. I'm talking to myself. Stop. Okay. Are you done? Yeah, I'm done. So what I'm going to do is I'm going to tackle... Man, where is that line? Where should that be? It's interesting because this one went really simply through that mark. I see this as a structural thing. I'm not really seeing it as I need to find some magical perfect line. It's just more it was obviously based around this wave structure, was based around this center mark. And this came from back in the day. This was an expansive center mark. Is it the same center mark? It is not the same center mark, but it is very close. What if you just use the offset value? The 220% offset value might change it, Booksy. This is true. We have talked about this offset value. What if that is the same center mark? It's just 200% or something off. It's the shift value. Ah, indeed. Let's see. Bats. Bats for AMC. We are bats who love AMC. This is not funny, Booksy. Again, I'm not trying to be funny, guys. I'm just talking. All right, let's see here. Let's go to this. And what we're going to do is add the other chart back to this. I'm like too hyper for my own good. And then, oof. Oof. Ah. Okay. That didn't do anything that I wanted it to do. Well, let's say then that it doesn't really matter. And what we're going to do is look at, man, I got this weird feeling in the back of my brain right now that I'm like seeing something on the small scale that's actually happening on the large scale. And it's not clicking just yet, but it might click today. Because I'm starting to get this image in my mind of the macro and how these markers are kind of flowing through that as well. I'm starting to wonder. We're doing a comparison to this region right here just to get like a structural comparison because it's a really good area to do a measurement from. And presently, our current time frame would indicate that we're measuring pretty well. What's odd is this line that I'm drawing, or I should say this other one, these guys, they're pretty darn close to being parallel to the original line that we're comparing to on the chart. Like they're really close to it. Yeah, both of these are being used. So that was my concern. So what I'm thinking is it might actually be the same parallel. It might be like a series that they just dropped it a little bit. So what I'm going to do is take this down a notch and see if I can apply it right here. Totally can. That's like way off. That's really low. That's interesting though, because it's sort of the same mark that we did our SOW, sign of weakness on, is the same parallel. But I definitely wouldn't suggest that that's correct through and through. It's way off. Okay, enough of that. That's not working. Back to what we were doing before. Right. We're just using this as a model of comparison for a wave, which is what we want. A wave, 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 wave. So we're going to accomplish what we want to accomplish, but I'm going to do my best here. Yeah, so there's some very, very important distinctions that would need to be made because this it just did not do the same thing. Like this comes through the low, and this ends up defining the middle of the wave, and it was already the middle of the wave way up high. Here. This is like a center mark for all AMC action until it finally did the reverse split. I have to look now. It's just a curiosity. I'm going to see what it looks like on the bigger picture. Rabbit holes. Eesh. Why did that come up so high on the daily? It's ugly. It does bear resemblance to it because, and maybe this is like slightly off, like just enough that it's causing some issues later on. I feel like it's really close, but not quite there. This goes way back to like the first run up. This is like the original flush right here, boom, boom, and then it just sort of skirts around it forever and ever. So I'm pretty convinced this is right. And we've done this before. I used this for that big wave that I did when I did the expanding waveform way back. And that was where I came up with a 250 bottom and like a 14 retracement, roughly. Yeah, and then this drops right below that. And it seems like it's coming above it again here, like it's holding above it. So like in our present time, I might suggest that that is actually right at the top of this gap. So maybe what we can do is really tighten that up by using the top. Since that is after the split, I just want to keep it there so I can see it on the chart. Is it the top or is it that opening value, closing value? I think that would be the opening value, would be 1344. Wait a second, I can't be right. The high is 1660. The low is 1333. Opening value was 1631. So it's either at 1660 or 1631. That looks pretty tight. Yeah. It would be kind of tricky to know exactly which ones are you supposed to use versus others, but that's where I would start. So, this is some kind of super important line then. It's probably just the waveform line that they're using like across the market here. Yeah. You know, even though I kind of abandoned it for a little while, I was talking about this as a reversal pattern because it was playing out that way at first. This was a really simple to follow reversal pattern, in my opinion. But later I changed because it didn't quite follow. You know, it wasn't like good enough. It was like, it just wasn't really working. But it does have a lot of that vibe to it, if you don't mind that word too much, where you're kind of going backwards to the same spot. You're retracing to this marker at like a similar time on the horizontal axis. So maybe there's some truth to it that it did indeed rotate, but the timing on it's really awkward. It doesn't quite work. Yeah, it would be like suggesting that you really should have come back. If you were doing this backwards, that this would have been like here. Maybe it was. I mean, that works. You gotta love that. It's really bizarre. So they went in a cycle from December 2022 through May 2024 to revisit. Yeah, I don't know. As far as I might take that for now. But it is a thought maybe you could use. So what we're doing is we're kind of comparing, yeah, this is interesting. What we're doing is we're comparing this move down, which does come after the cat ears through. And you have a similar move right here. Let's do like green or something. And you have a similar move here where this is the cat ears and then it comes down. There's a shift involved. We've already talked about how when you remove the shift, it doesn't look that weird. It looks like it's kind of right where it should be right there. Ooh. So yeah, now that I've fixed the line, look at where it is in relationship. I mean, it's really close. I don't, you know, maybe I'm a little off with this 220% thing, but We did the math as best we could, but that's very close. This interaction right here through that line is just an S-curve interaction. I wish I could draw it better. It's super small now because I'm scaled way out. But so like after it went through here, it dropped through it, tests it, comes back above it, and then distributes down in like an S-curve through it, bounces out, makes a lower low. This is where you get like a buy-in and a big March run up. And then it comes back through it again and tries to build across it until it breaks back up to the upside. So the structure, as we see it there, as straightforward as I could possibly make it, is like that. So you can see like a wrap, M cross down, a breakout, M cross down, and then another, really there's another one right here that's like an M cross up, right? That's going back above it and then jumping up. And then ultimately you're going back to, on this structure, and there's a lot of stuff there, but you're going back to this level here. It's like volleying up. So, you know, when I don't look at this, when I look at this without the shift, that shift down, and I kind of place this where we think it might be, we had to go back and adjust it a little bit here and there because it's not really matching. I think what we did is we turned it into like a bars, and we need to do that first so that you can see the candles. There you go. And let's just make it like gray or something. I'm just tired of this like crazy look to it. I don't want to see green. I don't want to see Christmassy colors. Get out of here. Holiday cups. I'm joking. All right, so then this becomes a similar walkthrough. There's a reaction off of it, and then you walk down underneath it, push low, and then you break out above it here. Much the same. And then you're trying to drive the price back through some angle. Wouldn't it be silly if the angle were exactly the same? You never know, man. Some of these operator moves are just really boring. It looks the same. But they're like they're pretty darn boring. Like they're not that interesting. That's really similar. So maybe. Sometimes you think it's like, oh, it's got to be different. They wouldn't do the same exact thing again. I don't know. Wouldn't they? I've seen weirder things. That could be right. That's the same angle. Oh man, what a world. I think this was the one, a while back I had this angle on the chart that these operators kept using the same angles. Yeah, they did here too. They used the same angle on this walk down. Yeah, this is the one. All right, maybe it's the same angle. So the rest of this would just be like noise afterwards, trying to get back through this mark. Okay. I'm happy enough with that. I'm going to leave it, but I'll do it more individually so we can avoid bias. Look, GME is up 9%. If it can make a backup here and hold it earlier, that's fine. I don't really care. So like it backed up to 29 and it seems to have bounced a little bit. At the end of the day, do I care if it goes down to like 28, 38? No, I don't. I think it's made the advancement it needed to make. It pushed resistance. It checked it. Now it has to show that it's going to hold support. You have to have the buyer stopping power. That's all there is to it. With AMC, we're really doing kind of a sideways comparison to something that I think is really important, but you know, all the same, it is a little speculative. You know, when I look at it from this point of view, this actually makes it seem a lot simpler to me, because I'm seeing this as like there's a divergence there, and I remember back in 2020 seeing that divergence here. It's just like a macro version of the same thing. You can see the visuals are just like stretched out. Yeah, it's flatter. It's a lot more boring, but it's the same motif here and here. There's an early turn as the price is coming down still on this walk down, and then it breaks out, makes this really violent move all the way to the upside that seems really, really bad. And back here it was. I mean, BlackRock sold off a bunch, and Vanguard owned like 30 million shares or something, like all the same. But it's interesting now looking at it because I'm like, that particular setup, when it broke back to the upside, did follow through in a widening right here on the RSI, like we were talking about earlier. And it already hit it, and then it kept hitting it and re-hitting it and re-hitting it until it came really high up. So I think that's pretty interesting. We're doing a very similar action right now. And there's the middle cat ears. They're definitely there. It's just hard to tell when you're not looking at like a small chart. There's the first ledge, and then there's the second ledge here. It's there. So where the heck is it going? Well, that's the thing. So cat ear analysis usually is pretty straightforward because you get a solid line there, but there's not a solid line there. It's obscured. We've done this so many times at this point. Like, we've seen me try to get the middle of these ears multiple times. I'm just doing it again. That's a possibility for the low, and then the high would be significantly higher. And I'm just going to go ahead and say I think it's not gone to the high yet. I think it's widening still. But this would be the best, probably the best one to use because the middle of the ears is significant. So there's a hit here. It goes through, and then you can see the hook there, and then the hook again. So I think that that is correct. This is where it ultimately found support, and then it broke through it, and then it resisted. So it's like, I think that's probably right. I'm going to leave it there. I'm not going to do the higher one, which is up here. Sorry, I'm not going to do it. Yeah, so we're widening out like we were there, albeit it's a little different because this walkout just has a different vibe to it. I mean, it just doesn't look exactly the same. And it was really weak back here. It's a lot stronger right now by comparison. It just is. It's not dropped to lows. It's not crazy weak. This went significantly low, which is funny. It's kind of like what we were expecting, was it would go back down to the bottom like a 3 almost immediately, and then it just didn't. So what you're saying, Booksy, is there's hope. Well, yeah, I mean, there is. You can critique me as a chartist all you want. I don't really care, but like, it's a good chart. It's a good chart. This is a good comparison because of the nature of the RSI movement even is very, very similar, if not exactly the same. I hope you guys can see that. I know I'm like, my charts are sometimes kind of messy, but it's just RSI and the two similar regions here really comparable in some ways in terms of how they're moving across. This would probably be true of any wave cross. So I'm just saying, like, we picked a good one, but like almost all of them are going to have that kind of reactive move, to come across the gap there in the middle. But I think that this is a good one for a couple other reasons. Like, it's got the same chop in. Now, where was this at? This chop before it moves up. This was right before it jumped the actual line. So this chop, this kind of like a, here, let me draw it again. This is like almost like a flag, right? So this is, RSI is flagging into that creek jump. I'm seeing a flag here on AMC's current time frame. Debatably could be thought of as October 20th, but it looks more like it's over to here on November 19th, which which makes a little more sense because of elections, that we would have it closer to elections as opposed to October. And we're right. Yep. Look at that. You guys are like, what are you talking about, Booksy? And your self-fulfilling prophecy BS. That's the creek jump right here. This is the one I've been charting and saying that that's the jump of the creek right there. So RSI did the same thing back in that time period. It jumped over the creek at the same spot compared to where the RSI was right here. So we're right. Yep. And then that's pretty wild, dude. And then oh wow, dude. Shut up, Booksy. He's such a goofball, dude. All right, then right here, this is kind of where things like really deviate, because this has like a super steep trend that's very obvious. And then where we are currently, it's not steep, it's not obvious, it's actually really shallow. It is a divergence, but it's really flat. And then I would have put this as the same line here. So like if I'm being as judicious as possible in how I decide this line, I would be saying it should be like there, because that is the middle cross between the ears. Right between the ears, right there. It's tiny, but it's there. And then it comes up again. And that's the same criteria we're using presently when we're talking about this guy crossing up. It's just, this is much larger in terms of the size. Okay, let's just take it from there then, man. We got the RSI matching. I think that's pretty obvious. We've got the push up into the creek jump right here. The rest of it, I want to say it's kind of self-explanatory, but the rest of it's just the working out of what is already a widening stance here. I don't particularly know that the end results will be the same. And frankly, the way this is looking, it's like, it would be hard for me to sit here and say that it's exactly the same, because clearly there's like a huge amount of stuff that happened here over time. And all we're doing is kind of judging it based on structure according to like where those breakouts are. I would say that the only other thing I can kind of point to is there was an additional creek jump here. And maybe that accounts for the extra M, like the 1, 2. There's another like push. I'm not seeing that as clearly in our current time frame, so I'm having a little bit of trouble. Like, where is that? I don't know. It didn't happen, is what I'm trying to say. It's like, it's just not there. Yeah, there isn't one. I'm so mad about this, guys. I think there should have been one. Like, it should have been like up and then back down earlier. And I had mentioned that, gosh, how many times have I said it now at this point? I thought it would do well to come back down here and then advance, not come up high, but then advance higher. We would be in a situation that would look like this, which would be more akin to what we saw in 2020. Not to say it has to be the same, but that would be roughly what I would have estimated if we were just doing the comparison, right? Proportionally. This wouldn't have come up higher than this. It would have come up lower, crossed the creek, hit it, and then jumped, which is what we saw back in 2020, which is, frankly, just again, putting it as simply as possible, is like a much healthier jump in 2022. So we do not have that. We have this massive push that just kind of kept going really high. And then we have, let's see, two levels that are kind of most interesting, perhaps. One would be this top, which I already marked off. That's kind of the middle of the first widening from back here. It's where that LSPY was when it was dropping down, or preliminary support even. They're defining that level. It later becomes super significant for the drop through. It's like the 50% for this flush. And then when it breaks back above that and then comes back below it, you can see the interactions there are really important. There's a second mark that's equally as important, I think, and that's the original bottom here. That one may be a little more mysterious because it doesn't quite hit it perfectly. It kind of hits a top zone here of it. So let me use the top that it actually hit. And let's just see what that looks like. It looks more like the liquidity shelf where the spring took off from back here, not the bottom. So I think I got it wrong when I said the bottom. So it's like 1, 2, 3, 4 times, maybe even 5 times on these daily candles you hit this mark coming across. It's the last support here. There's a important marker back here when it took off, because this is where it comes back above and then it goes. Just to kind of scoot that over so you can see it. So that's significant. So we need to find a comparable level in our current time frame. We don't really have one. And that would suggest that it's a level that you need to come back to, like we did here after a big sell-off, that you need to come back to in order to regain your footing and really take off to the upside. As we know the first level, we're pretty much at it right now. It may not be drastically different. Remember, we're trying to do this like proportionally. So I would suggest there's not a single one, because like you don't know what it is. This is like lower. This is the level it took off from way back then. Maybe like 320. So the current one that we're sitting at right there is probably the best argument to make, because this is right where that LS or that LPS like preliminary support was. I don't know if it's still falling down, but you get what I'm saying. This is definitely it at 415 to 425. But then I don't have a lower one because there's nowhere it broke out from, really. Maybe 380? I don't know. That's not helpful. Yeah, I don't see it. Part of that may just be because we didn't actually come below this structure when we came back down. Like back in this time frame, let's say for example here we had like stayed up pretty high. I think you would be talking about the same things, but it would be like us staying above this mark like the whole time, right? And you just you can't really look at it the same way. There wasn't the same interaction, so you have to pick a different level. You just have to. You can't use the same level. RSI came back to the 50% mark, so that could be significant. It stayed around this 50% mark the whole time. That's another maybe piece to the puzzle. I use RSI just because it's helpful, but this has already dropped beneath that. If you were just using the floor from this time frame, I'm on the daily, then you might say right here, it's already below it. I'm not trying to fudge it, but that's where I would put the floor. There's like an early hit on that creek. It came back to it, and then it made a higher RSI before the creek jump on the 19th. This dumped beneath that at 45. So it's adequately sold off, I think. If it's going to potentially turn, it's down enough, I think, to satisfy the proportional requirements, assuming that it doesn't go any further. And then while we were trying to understand, and I think this is important, this mark here, while we were trying to understand that, I think we need to just kind of go backwards and look at that same mark that cuts through the whole structure and really try to define that better. I mean, that could be it. As far as we know, that is a creek jump right there. This is where I might have to flip-flop and do different comparisons instead of scrolling back and forth. Yeah, let's do that. So I've done an RSI comparison on this chart by itself, but I'm going to flip to this one again and use this again to try to compare the two because RSI comparison is good, nothing wrong with it, but I want more information about the structure here now. So what I'm going to do is kind of observe. This is a daily chart. This is a 2-hour chart. Let's go to 4 hours. Let's get it a little bit closer so it doesn't look completely different. I like the noise because it helps me find stuff, but we're going to go split the difference between the two. We're going to go 4 hour and 4 hour. And then we're going to take a look at the structure. So this is the line that we picked out earlier, and then we thought, you know, it could end up being the same line, and it was steeper. So in this time frame, if you go to the current time, I dropped that line on there, the same exact angle, and it actually goes to that wick. I mean, it's perfect. So there's absolutely like two possibilities for that upward line, but I would definitely suggest that this looks like the key run-up line, and it's the same angle as that same exact line. I just copied and pasted it. That's, believe it or not, that's actually good news, because if it's that angle, it's really steep. So there's two possibilities I would suggest. One would be that one, and then I'm going to use that next on this. And then the other is the one I already drew on here. So that's one. So that makes sense of the higher marks that we hit coming down. I'm not sure I'm going to be able to do much better than that. And then this one, I believe this one is possible because of the lower marks here. I find it really significant that when we came back up, that's where that hit, and it really stopped. And it does seem to cut through really well the price action, albeit both of those are certainly contenders. We'll find out later. One of them is going to fit really well. The other probably won't. Yeah, probably. So then let's go back to 2022. All the way back to 2022. All right, and then let's find this red line. So we think that when you change it to the chart shift, that this might actually be the same line. It may have not actually changed at all, but I think for now we have to just kind of take it with a grain of salt, because at the end of the day, even if it was the same, like we wouldn't be able to do it without the chart shift. So that's not going to help us, you know? And we're really looking for that moment when it broke up above. So we're still looking at this key intersection where it broke back above, which for us, we've already identified it, and we think we got it right. The RSI matched, everything looked good. It's right here. This is where it broke back above. So I'm thinking this little gap up may be like the same as this guy when this gap up happened. This is way higher. See, it crossed and intersected that line way up here. And then this is also where it jumps over the diamond, which is not something I've charted on this chart. And it seems a little crazy to me, but I might try to do it. Maybe there's a special number there and I'm missing it. Gosh, how do you even do that? Because you can't use the... well, I guess you just do it. You don't... Nothing's going to happen if you just don't do it. I just feel like it's going to be wrong, but that's where I got to stay, I guess, until I get it right. It's wrong until it's right. Let me remove this chart for a second. Let's just look. Deep breaths. Okay. So here's what I'm seeing. There's absolutely a Very, very, very evident. I stress that. Very evident. I can't believe I didn't see that earlier. Maybe we did, but that is painfully obvious middle cat ear behavior right here. So those two marks define the center of that S curve, and they're essentially like resistance, or excuse me, support, resistance, and then it comes back up again here and checks it as resistance the last time it hits it. The next time that's met is all the way up here. That is pretty much exactly what you want to find, because the same thing applies in the previous time, although it's a little different because of the way this walks through, that these trajectories are met later. And again, it's kind of a mixed bag here, because I feel like I'm trying to interpret this like one way, where I'm using like time frames and thinking about like distance traveled over time and understanding they're not quite the same time frame, but they're kind of close enough at this point that you should be able to identify some similarities, you know? So this would be like the first sign of weakness. This would have been like the build out, and then it drops down. The weird thing is, again, this is really compressed. It's like a big shallow S curve or high heel, stiletto like we call it. And then this drops later, which would be this kind of guy right here, the build out, before it breaks out to the upside. So some of these markers are pretty spot on, and then some I don't think they are. Like this one's got me kind of thinking outside the box right here, this walk down. Like which one is the actual cat ear line? I don't know. Maybe they both are, but I'm just thinking out loud. That one breaks down and ends up hooking beneath it over here, like a head and shoulder. It's kind of similar to what we see here with like the drive back up. But this is like all together. You can't like separate them easily. And there's another one really, really, really low down here, which I don't even know if I'd want to use that. But that might be the one that actually is more accurate. And then this all stays beneath it. See, like this is the cat ear. It's a little odd because it doesn't look quite right to me. Like it never quite hits it, but that's like the resistance right there. I think that's a better one, and it better defines what we are experiencing here. That one. It's this one. The hook and then the drop in. It's just ugly. Okay. So interestingly, we also have a similar setup here where we've got kind of two competing lines. We know already that this is going to go to the top because I drew it to the top. But we have to be able to identify where that is. And yeah, I'm not sure. Okay, we think it's the same angle, whatever. Point being, this had defined that move early on in the breakdown. This would be the walk down, but this goes higher. I still think probably the best way to have gone about it at that time was what I did, which is just, again, just defending what I did back then. I think it's fair. This wasn't really clear to me that I needed to cut it in. So I used the outside, and I just kind of picked an imaginary point out here in space where it intersected. And that's what I used. Like, where does it intersect and have the best mark? Here, presently, there's probably more than one, but we may need to do kind of the same thing. So this to me apparently is at like 4. Man, I gotta just be straight. I think it's at like 425 or 426. It's not at 430. So there's not really like a good perfect interception then. What we have is like a walkthrough here that you could use. That's a possibility. And then there's a potential like second one that I honestly like just doesn't really have a lot of hits on it. It's going to only have 2. It's going to be here to here. And that's the only other one I could use for a diamond. I don't like it because it doesn't really look like a diamond, but for a structure, I think it's okay to just kind of estimate time-wise. Could be a good estimation. It was really perfect in 2020. I'm doubtful it's perfect here. It doesn't seem quite right. All right, but those are the two I'm going to use. And then I'm going to avoid some confusion by using a different color. Let's just do like orange or something, so I know what that is. So loose estimate is pretty good in this case, 136.03, and then we've got 134. Let me do it again. 150.04. 150.09 we'll have to do. Yeah, that's really tight. That looks good. And see, when this came across, it actually landed like right on it. It looks solid. Right there. So I think it's a succinct move as we're gonna get. So then the other challenge was like, where is the liquid center here? So what I did on this back in the day, I guess, is I used this as the where I thought that was. I don't know if that was right. Looking back on it, it may have been right. It ended up coming onto the top of it, but I didn't know at the time it was going to do that. I wasn't sure. I thought it would break out, hit it, and then go. But I just can't really remember. You know, I think it was like right there. I think it was just a simple intersection of like this mark and then that rising trend as we saw it back then right there. And I was like, oh, I think that's where it's kind of boiling into. So this jumped over at that mark. That's the shift value that you have to take into consideration. There's a shift in this because it doesn't ultimately break out at the same mark. So like that matters in the end, because as you do the measurement from the breakdown here all the way to that kind of liquid center, if you get it right, you know, and I wasn't like 1,000% sure I was going to get it right, but I was like pretty sure, you know, at the time. So I took that idea and I measured from like liquid center, and I thought it should be right up there in that pocket. If you take it to the breakout level, it ends up being like right on it. But if you just take it just to that pocket, it's like close enough that it would have worked pretty well. So without like fudging the numbers, there it is, you know, really close. That made sense to me because of the dynamics of a wave and the dynamics of a diamond bottom. But the idea of a shift, I could not find it documented anywhere. Like, I found people talking about like it's offset or whatever, but nobody had like some kind of formula. I don't want to say I guessed, but I just thought about what made the most sense, I guess, to me, and that's where I went. So, all right. So let's keep moving forward. Let's keep going. We're not done yet. So then the so this higher line doesn't really become super relevant ever again on this particular example, but it is close to what we are seeing as the copy paste of this line. So I'm going to keep it. Let's keep moving forward. We need to find the red line. I know I said that we pretty much already had it, but it only works again if you have the shift, and it's still like slightly off. So there's certainly a similar mark there. But we should be able to find that line. This is going to cause problems because this is going to make it look really low If you went from like here to here, it's going to look really, really low, like it's not even close to it. Let me think. Excuse me. I'm going to see what this looks like. Hang on. Yeah, I mean, that looks right as a parallel structure, but not as the overall whatever. It doesn't catch this one either. Okay, I just needed to double check it because I knew it was a good line. It just didn't look quite right. We're looking for the anchor here. This is anchored, this M cross is anchored around this middle. So there should be a similar anchor presently. I've got two potential candidates. Maybe the best thing to do would be to look at the interaction of where the breakout is, especially with that RSI clue here. This does jump above it and dip slightly below. It had clearly interacted on the S-curve down. And then it seems to be defined by these pockets of liquidity trading around it early on. Specifically this top, this bottom. Geez, I feel like it's an arc. It's not a straight line. I think that's why this is not working. But I can't draw an arc. It is uncanny, isn't it? How similar they are in walk down features. Jeez. Well, something better than nothing, I guess. Hey, Rally. I mean, if I have to pick one, I think I'm going to go with this one. Because I know it doesn't hit here, but it's the best interaction that we have in this area. And there's a little ledge that's very curious to me. I'm kind of watching, I'm looking at both these charts. There's a little ledge right here that's very curious. And I find that to be really important. And that drop here does seem to interact quite a bit with it. So, although yes, this looks like it would be really low if we went to the top values. So I wonder. It's kind of the same. I don't really like that though. It doesn't like add up. It just looks like almost like a parallel that goes back to the breakout, but doesn't really respect any of these. So it may just be a parallel structure. Trying to like fit it into a particular box here, and it may just be that there's two marks that are better to use than some of the others. All right. I mean, I'm kind of giving up on that for now. I'm going to put both of them on there. Let's see what it looks like. That was unexpected. It's really low. Dang. And there's like no interaction with it. This might be why this looks so strong for a while. It's like on top of it instead of below it. And this is like below it for a long time.
It's time for your afternoon stretch break.
I hate to say it because it sort of slaps us in the face with the possibility that this run is over. Granted, we didn't get the move, right? The big move, but I'm not going to say anything further than that. But I got to be straightforward. Like this to me looks like the creek dip and then jumps over. It looks like it's hitting here, not earlier. And if you notice on the RSI, there's a little flag motion right there as well. It's really small. I didn't really think much of it, but it's there. And if that's the case, and that is where the real jump is, that's super early, then this already could have happened. This could have been like the 1, 2, 3, like 1, 2, 3. So now we need to go back and look at, it just doesn't make a lot of sense to me because of how flat it is. Like, it's just like bizarrely flat. I don't like it, but whatever. It is what it is. It's there. The only other thing I can think to do would be to just like pick out another random arc. And we had one that kind of worked going back to this time frame. It's probably just another parallel, you know? Yeah, it seems that way. I'm not going to make it perfect, but it's there. I think it's just another it's the same, yeah, it's the same angle. So we picked it earlier because we thought it looked right, but it's probably just another parallel. There's a huge gap in this space. I think the same thing happened here, but it just wasn't, one of them kind of goes nowhere, right? It's just there. The other, I mean, it's not like it wasn't used, it was used. You can see the jump above it here, and then it pulls back to near it. But if you go backwards in the history of the chart, only one of these is more, I guess, more or less in the middle. It's much closer to the bottom one than the top one. So all the waves are built around the bottom. The top is there. It's interacted with a lot. But ultimately, I would argue that the bottom one is the one that's heavily used as like the center mark. So maybe we'll get a little bit of both then, of interaction with it. The suggestion would be that that channel that we've been dealing with does come back to the beginning of the structure, which is important. So at least for that part, we would have to suggest that, yeah, it originated back here. And maybe, just maybe, this is the same line and we're just experiencing it on a shift. That seems very likely based on what we know. This would then be like a massive upthrust through that mark, basically a 50-50 around it, which is what happened here as well. There was like a 50% swing right around that top mark here. And we see the same thing applying from this bottom up to the top. It's like pretty much like a 50-50 swing around that mid zone, especially if you go from like a little bit higher up, but it's pretty much the same in terms of the setup, especially if you use the after hours. I mean, we use after hours. I'm betting it's up here at 1390 or something, right? It's like probably right on the dot. So certainly that bottom one I think is being used as a stronger 50%, and then the top one is being used in part as a breakout. So the last piece of this little puzzle would be this opposite, one of the last pieces I should say is probably close to the end here. One of the last pieces would be these flipped around. And I'm not thinking it's going to yield very good results, to be honest, because to me it looks like we left this structure behind like a long time ago. It's hard for me to think that it's going to look even remotely the same. 127.31 is really steep. It's like way over here. Yeah, this is in greater support of that run up being like earlier. So these don't add up. Dang. Well, maybe there's something else to it. So let's just keep going. 127.31. It just didn't look right. I could tell. 127.31. That's not going to end up being right. So let's go to this guy, which is 135. What is this one? 133.02. Yeah, that's a little bit closer to maybe what we might expect. One more. There's another thing that I'm not saying out loud, but I'm thinking in the back of my head, which is this isn't actually the center of the wave. The center of the wave is actually over here in and around April, May. It's like right there. So one of the things that I'm like not talking about right now is that this is not actually the center of the wave. This is more of like a diamond structure that would denote like perhaps where that resistance would be, right, before you start leaving. And it's in the right spot, but it's just not really happening to help us because it's not giving us any new information. But there are some other markers on here, so we can use them from the top. 144, and then that's about as far as I'd want to take that. And then we probably would just need to divert to using the wave, not the top. The top motion itself is fine for the diamond. It's not fine for the wave because it's not actually the middle of the wave. It's a little misleading. 144.76. I mean, this is a really clean chart back in. This is like a unique time for us at AMC. You get this like really simple build out, and there it is. It's just right where it needs to be here. And the breakout, it's just straightforward. So the only other thing I would do is I would look at it like a wave instead. So the diamond structure is not really giving us any information. 152, I'm sorry, I forgot to finish. Oh, maybe it is, I don't know. 152, gasp! Booksy, look at where it is. It's the same spot. See? I don't know, maybe. I mean, maybe it's the same spot. It is the same spot. I don't think it's the best to use, but it's there. I guess you could argue that it's the same spot. It did work. Kind of. It's just messy. Like, it would imply that for some reason, like, we actually did break out in September and we just chopped along the outer edge here forever. Like, we basically did this motion forever. And then we slowly walked across these creeks, which is exactly what happened. And then, yeah, that the M cross happened and then it's pushed up to that mark. That's the first mark. So, I mean, it did work. It's just not, proportionally, it's like weird, I guess. But it is there, I suppose. That's the same marker, like same parallel marker anyways, if you were using, or not parallel, but a fan marker, if you're using a fan from the top. So at this point, back in 2022, at this stage, it backed up really far. It came back down to the gray area, which we've already kind of established, at least for us, we don't necessarily have that. We don't know what it is. We could estimate and guess, but unfortunately, because this goes really low, and this is really flat here, and this one goes really low, there's not really an easy way. to see it. Instead, because this is elevated and never came back below that floor, it'd probably be wise just to use the same number, like just to use that same liquidity level. If anything, the liquidity here is higher than the liquidity was here. This was low. This is actually set up high. So arguably, you know, as wonky as this chart is to compare the two, it is a bit of a quandary where like this almost sets up higher. So I'm a bit confused. Like this is, it's like a diamond that has like an offset that's up and not down, which is really bullish if it breaks up, really bearish if it breaks down. Okay. Dang. This probably was a fib level too, but I'm not going to go there. Let's just keep it simple. Like you have the walk across, you have the back up to near the creek, you're backing up to near the creek. It's right where it should be. In terms of the advancement, you definitely could see that that's the same spot. I don't really feel like there's much of an argument, but it is an argument. It's just not a very great one. It's just there. It's a thing. I don't think this matters. This line, it's just not really working out. I don't see it as very relevant to what we're talking about right now because it's not pointing to any particular motion here except for that. Yeah, if you want to do a poll, we can do a poll, but it's not. What do you mean by bottom in? Like bottom in short term? I'll do is the bottom in short term for AMC. I'm not going to do long term. So very confusing. So what's the measurement of this got to do with the measurement of that? Because what we're basically saying is that we think that if this is the same, that this could then potentially run all the way up to $11, which is quite in contrast to what we're seeing principally as a shift here that clearly went back to this level. This one seems to be suggesting you would go above it. Unless the bottom's not in, where does this go? $333. You're not going to want to see that. Yeah. You know, it's funny because, like, if that happened, it just wouldn't look like it's going anywhere. It would look like it's dead. Like, it's lost its momentum. There's a lot of different ways to do this short term. I mean, there's a lot of ways to do this measurement. I mean, because like technically this is like a halfway point also from like that breakout to this top and then it goes up. So like that's another thing you could do is like instead of doing a comparison to what happened here, you could do a halfway point and that's really low. That would suggest that more than likely It doesn't go above like 650s or 680s. So really low. That's one thing. That cat ear would, again, be a suggestion that you're not going to come back above that level. We're kind of running into the same problems we always do, which is you're starting to get the same, like, kind of same treatment. That's like 50% here. 50% here was definitely at the same spot. So what are we even like worrying about? This is kind of like straightforward. It really looks identical. The only thing that doesn't look identical is this breakdown and like how far down this went. It just didn't go low, which is great because it signifies that you're building a support higher. I mean, it's significant how long it's taking, but the reason I was saying earlier I'm worried it's on a curve is because I'm looking at this, again, I'm trying to be as objective as possible, and I'm looking at this from this point of view thinking it's not really nothing is lined up, you know, like the way in which this lines up with this versus this, it's all skewed. So there's a problem, and then this is also like skewed. This doesn't ever come back to this top, right? This is like skewed down. Everything is like skewed downward on this drop, and it doesn't come up as high. So what makes this difficult is that then when you're looking back, you're like, well, it still kind of worked out that this ended up being like a 50-50 run up, which I never really doubted in my brain like that could happen. That it ended up being like a 50-50. I thought it could come up to like $13 or $14, and it did in extended hours, but it was more of like, all right, you know, this should be a big reaction and yada, yada, yada. And then ever since then, it's been struggling. Underneath there, just like this was. We got to do a wave, y'all. We just have to. We have to do it right. We can't do it based on, this case, we can't do it based on 2020. We have to do it based on the way that the wave's set up here as well. So there was there's a bit of a challenge to this. I'll just start with that. In that it's going to be a debatable point where you think the wave should start. I had previously done it on April 20th as the middle because I thought that looked right to me, and I still would go back and like occasionally look at this and say, yeah, I think it looks right. That generates a lot of good points because then when you're coming down, you get these trajectories. But I could easily see why someone would argue, no, it's where it first entered the range back here on December 21st, which pulls this over to like closer to like beginning of April. You might say, who cares? Doesn't matter, Booksy. Well, it does and it doesn't. You know, like at the end of the day, where this middle is will define a lot of those trajectories. And then what we found is that the inward and outward trajectories were much the same. So this is where it really made a difference in terms of like where that middle actually is. So if I use this as the middle and then use like a downward trajectory, right? And I think that's the entry trajectory right there. Okay, that's fine. What I can then do is extend this, and it's going to go really low, but I could extend this down where it says 36 degrees, and I can intersect here and go 36. It should give me the same outer trajectory, right? So this is, if I did it right, 36.62. So this should be 36.62. Why does this matter? Because when I was trying to confirm that I was right about the middle, what I did is I used a series of these trajectories to see if that matched the price movement. In the end, I found that it did match, so I used that as a middle. So then I did other ones. Again, I can't really remember if I did it from over here or what, but then I did other ones from like this way, right? So this is a bottom right there, and that's a good one, and that's 19.52, and then I would use another here, and I'm just kind of defining trajectories off of a middle point. So basically tangents on this wave. Without going too crazy on it, right? 19.6 or 5.2 or whatever. And I was trying to see if like these were actually in play. You know, were they being used as support resistances? Like as if someone had a trellis behind all the movement and they're kind of identifying where we need to go. And the short answer was, yeah, it worked well enough. So I would do that right now in order to help define perhaps, again, some of this movement, but also like where it may go in the future. My bigger issue is if it's skewed, like if this were down lower, that could cause a problem. And just knowing that that's there doesn't necessarily give you the answer. You could have 99% of it is right, and then the 1% that's wrong causes you to fall. You know, it's like climbing a mountain. And you could be right 99 times, but if you're wrong the 100th time, you could still fall off the mountain, you know. That analogy doesn't fall short in the stock market. You got to be mindful, like the way you interpret it is really important. So yeah, I think that using the drop level from that distribution might be appropriate. That's comparable to this, or the gap opening value. So one of the two, because the gap opening value, I don't know, to me that's closer to this bottom, which is a little bit more like what we experienced here, where it only ever went up to, like this is 150 now. That's closer to like the bottom, but it is where that drop happens here. And ours in our current time frame, like most things, is a little different. And that drop value happens at $10 and like 10 cents, and then the opening value is like 9 something. So, well, maybe we'll just do, dude, I don't know. I think I want to go with the lower value. I think there's more interaction with it. There's some interaction back here. I think the higher value is okay. It's just not my favorite. I'm going to go with 936. Not the opening value, but not the top of the gap, not the bottom. No, the bottom of the gap, not the top. Excuse me. Gosh. Language. So roughly 936. And then there's the issue of the middle. I can't do this without the middle. That's not bad participation. 30%. So in this time frame, the middle was around the first cat ear peak. I don't know. Maybe it's that big wick. Because that would be the same idea here. And then it goes into the lows right after. And it's like a triple top. It's like a 1, 2, 3 motion. 1, 2, 3 motion. Let's just try it. So we're going to try the middle being July 22nd. It's kind of long-winded, isn't it? it makes sense for other reasons too, because this is where the last place it tried to push above. You see that? It like wicks above the, right there, it wicked above that trend. We see the same thing here. It's the last time it tries to like wick above it and tries to walk it down after. It's like right there. Turns, pivots, right? So I think that's right. That's not going to be easy to define, you know. I think another person might look at this and say, well, I don't think it's there. I think it's here, and this is all part of the second ear. And yeah, I don't know, man. I don't know. You could be right. It could be June. That's the only other one I would pick. I don't have another in mind, so we'll see. All right, let's keep moving. So we're going to just kind of throw this out there. That was pretty close. It kind of implies that the wave wouldn't be done until April, which is super slow. In which case, we could have a lot more time for this upside. Like a lot more time. So then what? Man, I don't know. Well, you've used this trajectory quite a bit. Maybe we need to use something else as well. I know that works because I did it when I built it out, I used the shift from here to help me with that math. But a wave is a wave. Kind of seems like that's where we are. I mean, it's sort of depressing because it doesn't look like it's going to go above it. But I think the key here is not to worry too much about this as like some kind of supply-demand line. I mean, it's oddly, it's kind of acting like that right here, almost like it did over here, like just in general. But it's not something I would put like a lot of emphasis on. It's just a directional type thing. Frankly, if you had done that back here, you'd have been like really disappointed when it stopped following along. In order to make it kind of follow, you have to go to like the extremities of the wave really low, like really, really low. Like basically go down to the low. And then this follows pretty well, as you can see. So we could do that. I mean, we just do it just to do it. But it does make sense, so maybe we'll try that. So maybe we'll use the bottom, and then we'll use the bottom here, which is like 402, 403. I mean, it looks right. That is pretty close. Well, I mean, yeah, I believe it. If you kind of ignore like the noise of the differences, you really can see it's very, very, very similar. Maybe one of the things I would say is pretty distinctly different is this doesn't ever really interact. This is really low and it whips above it. This is really high. Doesn't seem like it interacts very much in this time frame. So that could be an oversight. But in terms of like where the bottom is and the top is, that looks really good. So that's a thought. This is starting to remind me of that other setup. And why wouldn't it? Because I used the same setup. I did the same thing back here, guys. I used this as a way of measuring out where it could be. Of course it's the same. This is the one we did back here, and I said maybe it doesn't get up there until way later, and you get this weird kind of first move, second move business, right? Remember? The reason I'm like saying this makes perfect sense is because this is quite literally the exact same place that I compared to where we're currently at. Like it's identical. Like that's the same comparison that I just made here. So like I'm almost like copying and inadvertently copying what we already did. And we did that scenario where it comes up late in the, and then it ends up kind of late and ends up high instead of low. And then it breaks down real slow over time back to the downside. It's interesting because now I'm like, technically that's the same thing. I mean, it is. It's the same build out on this bottom and this bottom. Yeah. Pretty cool, but also kind of annoying. And very different from what I've been saying, because I've been saying that I think it goes up sooner than later. So how does this play into the overall motif of this wave and this wave and la da 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 da? I'm not sure. Also, what doesn't make sense is this particular angle doesn't match even closely what we're seeing as a ramp up. I think we're going to have to use a different criteria than just where did this go and where did it push away from. I don't know, man. I like that criteria though, because it works. Like that is a really solid comparison. It's even at the same April 20th mark right here. It's the same comparison, same place. It's built off of that bottom. But what? But what? But see, but what? Always a but with you. Well, look back in the day, if you hadn't like known that this was going to hit here and like you didn't do all the stuff I was doing and you were just using the angle, you would have put it higher, because I would have put it higher. I wouldn't have put it where I put it. I would have used these two markers here, and then I would have used, because there's just very clear evidence. There's like tons of hits. I would not have gone lower. So the fact that this goes lower would have thrown you off. You would have expected this to be much higher. So there's a little bit of a disconnect when you look back, because you're thinking like, well, it didn't ever go that high, Booksy. No, it didn't. And it just doesn't become a very reliable line then, because it doesn't really look like it touches anything. I think there's a second one where this consolidated, though, that is reliable. And I think this is the one that ended up being the one that I used more often, which was right here. This is a completely different line. It's a completely different value, right? And it doesn't give you the peak, like not easily. But it does give you a better indication of kind of where, if you have the when, you would know that intersection. Like if you have the timing, the intersection's there. And it actually comes off the bottom of the structure, not the top. So it's like the bottom of this right here, not the top. So maybe using the top isn't going to help us because it's not quite right. It's way off in La La Land. And that didn't work here, so it's not going to work here. Instead, we should be using the bottom, not the top. Which is tricky. The bottom would be not even that, but this. Yeah, that's it. That's the one. And it's also the bottom here, which is nice. That one. And it's the top here, which is nice. They give us a lot of points, so that's good. That's the one. So it's not the top, it's the bottom. boy! Woo-hoo-hoo! Look at that. Dang, man. Dang. That reveal was epic. That was the most epic reveal ever. I was like, what's going to happen when we zoom out? And I looked over and boom! Right there at 9:36, right at the dot. Bam! Whoa! Wake you up with some coffee. Ow! It's like crazy. Dang, man. What's wrong with you, Booksy? Yep. Okay. So as far as distributive cycles go, you guys are like, what the heck, Booksy? Yeah, but that doesn't match up, right, Booksy? Because you said blah, 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 blah. It shouldn't be up there, but it matches that. I know. It's not quite right. But, you know, to each their own. I think that's a really solid intersection. I mean, you can say whatever you want to say. Why wouldn't we close the gap right now and go down? Good question. Not sure. I'm not sure we won't, you know. There's some things about this that you got a lot of thoughts running through your head. I don't think there's any wrong answer necessarily. Like, you could look at this and say that I think the wave is truly going to go down and then back up. But, I mean, that's a really solid waveform. That's crazy. Arguably, we could go through this for days and days and days and never really come up with the perfect answer. If the wave is right and the arc is right, then maybe this is correct and it doesn't hit a peak until March, you know, come back to $9 till March or something. But there's also a chance that what we're seeing is kind of a glimpse of something else. Like, this is a very particular setup that has distributive elements to it. But we did a similar setup back here. We already looked at this, and it's comparable, but this is very different. Like, it does not have this kind of low, slow build out that eventually pops once. Although I would argue that fundamentally this has the same kind of motions. Like, there's an M cross here, jumping over that after that slide. There's a rally. But then the top for 2022 is so abrupt, right? The August top. But the top here way back in 2021 is not abrupt. You know? It's slow. It's methodical. And I think that you kind of got to take it in stride. Like, it could be either or. And I don't think it's wise to just sit there and say, oh, it doesn't. It's going to be slow and stay really low and have these big drops until this one moment. That could happen, yes. But there's also this element of like, I don't know. I mean, once you make the jump, that's what happened here. It's like once it made the jump, it just kind of advanced. And we're in a similar spot. You can go back and check it if you want to check it against what I'm saying. It's essentially like the exact same breakdown. So you see the key difference. Like, they don't go down, and this one already had gone low. So in our case, it's like, I don't know for a fact that it's not going to go low and then chop and then come back up. The big gap way down low. But if I were to look at this just objectively and say, is it wrapping around the arc? Yeah. It is. Is it possible that this advances now and then drops and chills out for a bit? Yeah. But we already did this. I mean, this push up with the pullback and then the later advancement, we did this chart like 2 weeks ago. I did it on the day that I was like, we're going to do bear stuff, and like nobody tuned in. And I don't care. That's not my problem if you don't want to see something. You know, just because. But we did this idea that maybe it doesn't go that high, and then it basically builds out until March. And I said it's kind of like a bizarro world idea because it didn't look like that would happen, but it does answer a lot of questions, about why we're trading when we're trading, and like maybe this idea of like you would want to trade above, and that's really what this is about. I think is like a distribution higher. In this particular example back here, and when we came back up to the 50s and everybody's like flipping out about it, it really was to come back up and sell again just beneath the floor that we had just dropped. And I'm looking at that like, yeah, it's about the same idea. I mean, so in theory, it may look like when you do the one comparison that there's no way it's going to get there until last minute. Like this is going to be just a massive move, right here, February, and there'll be some massive move or something. That's not really fair. I mean, it could be that is where it happens, but frankly, like this is really, really similar to that chart we did on the bear day. And I would say that it's equally possible that this advancement could have kind of an early pump and then maybe struggles to hold for a bit, but does advance again. And it's not a broken chart. I think it works either way. So yeah, I think this could then have that gap fill way up to 10. I already filled the gap, but you know what I mean? Like that's the same area that we would be parking our horse and like chilling out right there. And again, I don't think that necessarily is good. I think it could still be that this comes down. This changes a lot of things if we go this route. I got to be honest. It still changes like the overall dynamic of like what happens next. There could be a lot of different things that you could draw from that. So I don't really particularly love this way. I've already said that before, but it's there again. I think what we're doing is we're kind of reinforcing the same ideas. But I will say this, again, the difference in that setup is very obvious to me. Like there seems to be a disconnect here between the way in which this sets up and the way in which this sets up, where this sets up very steep. And I've got a just inkling in the back of my head telling me that I don't know exactly what it is, meaning I don't know exactly where that skew would get you, but what I'm thinking about is like that may not be level, And I'm kind of assuming that it is. The other way to interpret this, I suppose, if you're just a negative Nancy, is that this didn't creek jump, but I don't know how you could do that. I mean, it definitely looked like it did. But maybe that this is somehow still early phase, like here, and it's going to drop more, or it's just going to widen out from here now. I'm not a big fractal one-to-one kind of guy when it comes to that kind of stuff. I don't really like that. I don't think it makes sense of the RSI either, which to me already looks like it's progressed pretty far. So I would suggest that if anything right now, we are indeed in the same spot that we were anticipating. And I would say that if this has already made that jump, which seems apparent to me that it already made that jump, that we would expect some kind of a build out and then a breakout. So the good news is, without going like crazy detailed, we kind of were right to begin with today, which is good. That I wouldn't, if you're just kind of looking at the bare bones here, the expectation would be wherever you land, whether it's at 425 or whatever, wherever you land here to retest this creek, that this breaks, or maybe you're just already there, that this breaks back up and ultimately goes all the way up to like 740s. And I think we're going to find that it may end up being this bizarre scenario here where they go up to distribute first and then come back down later. We'll have to see what happens. I wonder, anything above 5? Look, dude, if I'm right about this, then I'm not going to be changing my mind like every single day. If I think it's going to go up, I think it's going to go up. So I'm not changing my mind about direction right now. It just doesn't make sense. What I'm doing most days is I'm going through and I'm trying to look at the chart from a slightly different point of view. Like, this is super important to me because of this. Does you see how these connections, like, they just work? If you did it right, things should click pretty easily. And I'm telling you, like, right now, this looks like it's clicking pretty easily. And I had argued that I thought the whole reason we would come back up was to get this creek, and now look at where that is. Tell me I'm crazy. Dang, man. I want to curse. Like, that is so freaking close. That doesn't even make sense. Like, we did this inductively. Like, we went from the micro outward, and we looked at this as we could build it outward as a structure, and then look at where it lands on a macro. Look at that. Jeez Louise. Look at that. Like, what the crap? You know what I mean? Like, how could you have possibly landed on that doing what I just did? Think about it. It's crazy. There's no way you could have guessed, is what I'm trying to say. It had to be mathematical. It has to be mathematical. If you're drawing charts and you're looking at that, I think you're right. But if you're drawing charts and you're looking at this and you're saying this is like 150, you can do it by flipping the line around. And I think the only other way to do it is you subtract 180, right? Or whatever. So if this is 150, this should be like negative 30. Yeah. Isn't that right? This ended up being negative 150 negative. I'm not sure why that happened. It's not. No, because then 30 degrees would be like this way. That's like the opposite of it. Yeah, so that's the opposite. That's right. You would add 180 to get the same line. Never mind. I did it right. Yes, so 60 would be the difference between 120 and 80. Yep. All right, so let's take a look at the angles now. The angles. I'm going to use the angle we broke out at because I think that's the best one here. It's going to be different on your chart because you have scaling control. I don't have scaling control in your own chart. You can change that number, right, if you scale differently. So, like, do your best to scale it, but just remember, like, I won't be able to duplicate that ever. Like, if you're giving me angles, it's not going to ever work. Unless our scaling is exactly the same. We'd have to go change our scaling, fix it, and then leave it the same, right? 36.46. Right. 36.46. Which, I mean, it should be like this number if I did it right. I don't know why it'd be any different. I wouldn't expect it to be different. But I'm trying to get it through that point. Gosh almighty, that number, dude. I cannot believe how perfect that was. I'm like, my brain hurts by this. That's just like, how in the world? I laughed about the first one. I kind of got stunned by the second one. But that's where that, I cannot believe it, dude. Believe it, Booksy. You must believe. That is why you fail. I don't believe it. I don't believe it. Dang. Sorry, guys. I can't react enough to this because that just to me is like bizarro land bizarro. Like I do not. You don't usually get it that perfect. Some of you guys are like, yeah, but what about all that stuff about going all the way up and then all the way back down and all the way up, all the way back down? It's just an alternative theory. Don't freak out. What this tells me is that there's a super strong connection here. And I think ignoring the reasoning behind it would be detrimental. So I think that's a really, really good signal right there from March. What does it do if it breaks down? Like, let's say it's like 2022, it does go up, hits the creek, which I can't, again, I'm like, you know, somebody just said, why not go ahead and get the gap low and then go up? I think if we did that, we'd be healthier. If we do this, it's not going to be very healthy. It changes a lot of things because, yeah, then we're looking at like long-term downside flushing again. We've talked about May, June though. It's like not like that's a bad timing. May, June has been a really consistent one that's come up a lot. So I don't want to like get rid of it. But I wonder if that implies to some degree that this run up is like really bad. Like super ugly sell off. I can't imagine why. Unless there's another offering or something. Like, why would it be? There had to be some reason for it to be like really bad. So 936 bizarre intersection on March 28th. Really important intersection. Just looking at the chart, you wouldn't see why it's so important. But if you followed what we did, it's like super significant. And then if we boil this down to like the basic integers, if it flushed all the way down, which is a big if, I'm scared to look at it. I'm wondering about this line right here. I had a feeling. So if the structure is built around a rising that, and it does happen that way, if and when it does, okay, then you look at this as a potential drop point later because this will be like the last support marker that was built. And that's kind of what happens in most of those winding, unwinding moments. So I was reluctant to do that because I was like, well, I want to see where that middle is. It's not a good look. You're kind of guessing, though, about the end, aren't you, Booksy? Yeah, I don't know for sure where that breakout is, but we've talked about that before. That there could be like a massive break in January. But what if it holds, you know? Maybe it just builds out right here and it actually holds up. And it does break out, but it never goes back down. It's like it's missing something. Why are you so convinced it's going to come back? Because it's missing something. That's why. It just is. Well, I'll say this. If it gets some kind of big move up in the present time, I would be reluctant to call it anything but like a phase B if it didn't immediately advance. So just like everything else, the expectation would be if this is the wave up, then when you'd have to come back and like check this in force potentially later. It's like principle of like M crosses, like one. This is like a big 1-2 and then another 1-2, but then after that you would expect it to come down. So like if I saw this, and it went 1, 2, and then it broke out here, all right, and then it goes really high for like another 1, 2, okay. So if I saw that and I was like, oh, okay, 1, 2, and then it comes back up again, 1, 2. I gotta be honest, like I'm just looking at it like from this point of view, if I'm a trader and I'm thinking about how this has moved, I'm probably my expectations are reasonably, I think, gonna be like, well, I think it comes back down because the way in which this looks, it looks a lot like this kind of stuff, right? Where you're getting these like secondary motions, like a giant UTAD kind of thing. The expectation isn't bad then to say like, well, it's got a couple different points it could check on. One would be like really steep, which would be this guy, which is kind of the big one. That's the one I'm concerned about because it's like really low. You know, if you drew an arc down here, it'd be like way down here. These kind of indicate that landing right there is that big pocket down low. It's still there. And then the other one would be this flatter area here. Like once it made an advancement, if it's going to hold that advancement, you could use that, right? And that could also be potentially where it catches, and that's it. There's nothing else. Like those are the creeks. That's as unbiased as I can come, okay? Because like I don't believe that there's anything else to look at, in my opinion. If you're gonna talk about upside and it stayed elevated and it traded this top area right here, instead of kind of doing a pump and dump, and it stays elevated until March, which again seems maybe unreasonable to some, but it could be very possible here. I think that at that point, we're talking about what happens next. It's like, imagine for a moment this did this massive run up. I mean, you have to then take into consideration like it may not check a whole lot, you know. And even like looking at this, check out where that line is, extending it right down. You knew I was gonna do it, but like it's going low. So to take off here and not test it, you're kind of inviting that drive back, at least to this area. I mean, it's going to intersect probably. I bet you it already does because we already have the markers. I need it to hit 8 for break even. Do you think it will hit? Barris BS. Okay. That's not a very nice thing to say, but do you want me to answer your question? Usually if you're trying to get someone to answer a question, you're a little bit nicer about it. Usually, I don't know. You don't have to be a soothsayer, but folks, you guys are roughnecks. There it is. Man, it's there. Yeah, so that first push-up met this other creek. It's right there. It's right where it should be. Yeah, pull outcome is like going crazy. That's where you would expect it because there should be like an identifiable middle here. As a potential middle. It's not like it definitely middle. Hey man, I'm just gonna tell you what I think. I don't need to be bearish or bullish in your eyes. When do I think it's going to hit 8? Yeah, I think it's going to go there. I think it'd be pretty close to getting there now. This is one of those scenarios that keeps coming up. It's the second time it's come up. So it makes sense for me as to why it's here, but it would basically imply that you don't quite get there right now. You get to like 748 right now. That's the magic number that I came up with. And then you'd come back potentially and break out later near earnings and go up to like 9s. That's very likely if it's happening, it would be happening like now, like going into the end of the year. Like I get that sounds bat poo crazy to most people who see this. They're like, it's going to drop and just keep dropping. I don't doubt that it could, and I'm not going to sit here and argue the bear side any more than I already have. Like if it breaks back through this creek right here at like 420s or whatever, it's going down. Like it's probably done. I mean, yeah, is there the random oddball theory that it could come lower and then pop up again? Sure. But I'm not going to play that theory. All I'm going to say is like, I can't say it's bullish until it gets back over 460. If it gets back over 460, I think it's really bullish. I think there's a good chance if it gets back over 460, it's going to go all the way, like pretty far. But I got to say, like right now, this is kind of the only major outlook I could give you that makes sense of kind of what we're seeing on this widening here. And we've had this back and forth with it for quite some time, you know, but I've had this kind of stuff in my rearview mirror for a while. I mean, it's been there since we made the gap up. I don't think it's a coincidence that this is now generating like a really solid case for it, you know? Why would that not make sense? It would make sense. So it should make sense. So if this arc goes up into a distributive action, we just did it. It took me hours, but there's a really strong clicking moment that happened here when this intersected with that midpoint arc. Like that to me is a big clicking moment. And then the fact that that intersects the creek is just, it's mathematically, it's not possible unless it's a possibility, like a strong possibility. Like that shouldn't be there in that place unless it's one of those things that it may not be inevitable, but it's absolutely relative. Like, or it's not relative, but what's the word? Relevant. It's relative. You think it's wrong. I think it's right. Nah, it's relevant. Like it's important. And then grand scheme of things, you don't have to look at this any other way than you need to. You don't have to tell me, tell me what you think, right? We had talked about maybe moving out of June, really doing a big move out of June, I've been talking about that for a while, June, July. Like, I genuinely think that this looks crazy to us because we're not thinking about that possibility that it is indeed, going to happen. But right now, like, there's a lot of huge amounts of liquidity gap down bottom and all kinds of stuff. And like from again, like on a big picture analysis, if I showed this to myself and I didn't know what it was, I didn't know this was AMC, I would think it's perfectly reasonable. This looks like a very simple setup to me of like a 50-50 swing on this creek to get down to the next creek. Like this happens all the time in the market. All the time. Like it happened right here, like there's the same example, right? But you would just be looking at like, oh yeah, there's a creek right there. And there it is. And then it's like, oh, and when it broke down, right, it drops 50-50 through that creek to try to get to the steeper creek, which is real low, over here. It's not complex. Like these kind of math setups happen all the time in our market. So like for me, I'm like, yeah, that makes sense. And I'm looking at this like, yeah, it's there. They gave us a 50 and it's there. So and it goes backwards. And that's been the case for a long time. Like they've presented us with those downside targets for a long, long time. So this is just a really massive middle. I think it's going to go. I think it's going to distribute longer than expected, which I don't know if I'd compare it to 2020 more than I already have, but we did do a second comparison to 2020 with that breakout, and I think we found that there was a wider line there. I'm not sure where exactly it is now, but I think we used because like at first I was using this mark to the 13th, and that made sense because of that gap up there. Then later we looked at where it crossed. It's probably going to be pretty similar. Where it crossed through this bottom. I want to say it was like, it's kind of tough. Well, let's do this. Let's reverse engineer it and see if it makes sense. So does this make sense from like a 50-50 standpoint, like coming across here? This is widening, narrowing, widening. Does it make sense potentially if it doesn't break down to go back up? Yeah, I mean, it lines up with timing-wise what we might expect here. Let's take that same principle and apply it forward. I think what I did is I used that middle M cross, but I'm just going to take it and flip it. What's the angle on that? I just clicked it and I didn't see it. Where is it? Can't see it. Why is it down there? 140.62. That's pretty close to where we are now. It's interesting. Maybe it's steeper. He didn't sell at all-time lows. I mean, he kind of did, but kind of. That's maybe a better one. It's like 50-50 across. Yeah, I like that one better. So that's a bit steeper. Maybe it hits it a little higher than I'm saying it does. It doesn't have to get there anyways until later, so who knows? We can figure it out. 147.21. Okay, maybe. I thought what it was that we picked this as a, this is the low, and then we used that. Because that would have been the valley. I just can't remember what we did now. Man, it clicked really well too, so I was just trying to get it right, but I don't know. I don't know where it is. It was probably going through December or September 13th, like directly. Yeah, right through there. It's close, but I mean, arguably any time between October 9th and November 19th could be used as a middle because it's all where the crosses are happening. Yeah. Man, lots going on here. So what these would represent, these other markers I just drew, might represent maybe, maybe, may represent the high over here eventually, like an arc back up, because this would be like the middle cross down, and then you'd arc back up. That's a big maybe, you know. In theory, if you're just looking at it as rotational symmetry, then you would suggest that first this would then have to dump low. Like you would have to say like, oh, I think it's going to go way down here and then rocket all the way back up. You know, I don't want to get too deep into like rotational symmetry kind of stuff, but that is a possibility, I suppose. If you looked at it like that, you would say that you think this is going to go way down. You know, at some point, I'm not really sure even how you would do that. I guess you would go like, this is the rotation out, and then this is like a rotation up. So that's kind of closer to what we had thought before. Like, yeah, you'd move up to like 6, and this is a lot more similar to the first thing we thought. And then you would dump down, and then rotation-wise, the next motion would be all the way back to that mark. So it would be like some huge move backwards to this mark. And this looks a little more similar to like the first thing we drew out, because we were looking at this as if it didn't do the big move up. It probably won't do the big move up. And instead it does that, which is more historically like what you see on these kind of breakdowns. Totally makes sense. I don't think that's wrong to think that either. This is just another possibility. And this is a possibility that has decent probability because of the way this is moving, because of the math associated with it, because the fact that we're widening right now. It's kind of curious. So I don't want to give you guys like false hope and say that I think this is definitely going to happen. Like the other charts we've drawn out, the ones that make the most sense, there's not that many different possibilities. It's like one or two if you think about the big picture, and both of them involve downside. Both involve temporary upside with some downside. The only situation that involves continuous downside is if we break right now beneath like that 420 area and $4 area. That's kind of it. I mean, I'm not lowering the bar. I'm just saying that's where the creek is. So at that point, if you hook down here, it's dunsies, right? Like I wouldn't put it past us. I'm just saying like that's the only real scenario for downside. So it makes it really easy. But the scenarios for upside here are kind of interesting, you know? There's one chance where we just kind of pump up and then we sell like right back down, you know, and we're really low. So we go up first and we come really low. And then there's another one that's kind of odd, which is if the market and your operators want to trade higher, we could do sort of this halfway point business at like 650 and then actually trade up again into March before we start coming back down, which frankly feels very long-winded. But what that would afford them is it would afford them an opportunity to basically do the same sell down right here, but like at a slightly lower price. So you could just do the same walk down that you did first time. Just do it again, basically. And then walk it back down, right? And that way you can get back to low liquidity. Oh, that's not possible. It's never going to happen. Yada, yada, yada. Well, it happened already. I mean, they already had enough shares back here. They had like 60 million or something. They got rid of all of them. There's no history there that you can't see with like Vanguard and stuff. But it's definitely possible. With the amount of institutions that have bought in here, if they start unloading from $7 up to $9 because they don't think that it's meant to break out yet above that creek, then you could easily see this walk back down after the fact, you know, for months and months and months, or at least a few months, walking down after the fact to get down to the lows. And I don't find that kind of chart to be particularly scary to me. Like, to me, it's like a zigzag, right? You're just kind of like, oh, so you're going to go up and then come right back down. And I feel like that doesn't look wrong. Like that just looks right to me. Like that happens all the time in the market. So it's weird to me to think about it as like a really negative thing necessarily, but I understand why people would see it as like negative. Like that to me could be a really huge bottom, humongous bottom structure. And then you go to like macro analysis on this wave out as a huge wave, it bleeds out farther. That's where we get to like the bigger picture kind of stuff we had talked about before. Once you've made that downward motion, if and when that happens, and it could be a variety of ways, once you've made that downward motion, and then all that's left is the creek jumps, you know. And then we're talking about, 50-50 layups really high to like the 20s. And this is where you're starting to get to that crazy stuff that everyone wants to see, right? You're just kind of breaking out and flying into late 2025 into 2026. This is where we see I think this is where we see our macro really sort of going, I'm maybe going a little too crazy there, but a little too high there. And this would be really compressed, more than likely. So that looks bonkers to some people, but I'm like, I don't know, man. It looks right. It looks right to me. Like, it looks like a normal day in AMC. Like, let's do an M cross, jump some creeks, hit them, and then jump big creek and rally back up to here. I know, I get that. I get it. Gap fill, what about it at 40? It'll happen. It'll happen over here. I think it'll be by about 2026. Look, there's no perfect answer to anything in the market, but if you want to like go a step further and take it, like we did another analysis the other day on this to talk about possible shorter term build outs, things like that. I don't think it's as likely that we go up shorter term, but it's not impossible either. A lot of these things are just opinions. Like, what do you think is going to happen? I think this is the biggest wave we're going to have. If I go back and I look at what I did in 2000 and I guess it was the beginning of the year. I don't know. When was it, guys? I can't remember. I did this chart a long time ago that talked about this build out on, it really would have been like here. It's very low, but it's basically like a build out for like a huge wave, right? Like it goes up, down, and back up again. And there's a number of places that it could intersect, it may intersect, so on and so forth. What we found was that what seemed most likely anyways was it wasn't really going to terminate until 2026, which is really long. It's a macro move. But before that, I did another one which was based on, and I can't recreate it right now, but it was based on a fib time cycle. And I can at least do a couple of them. And what they were was, I'll do like 3. One was like here. This one was actually high. It has to do with accumulation distribution kind of stuff. So like one was there, one was there. And then this one would have been accumulation cycle. But this is kind of what I came up with. It was like a really wide angle, because if you look at the structure here of the distribution versus the accumulation, the distributions match, they're cat ears, the accumulations match. We just did this today. We just did this bottom and this bottom. They match. They're the same thing. If you do these three tops, 1, 2, 3, they'll match. They're the same thing. So the waveform has like been widening for the last 3 years. And so the last point of this wave was like the one that would be like, this would be the one that would like kind of alley-oop. You know, if you're going to go back up, that's the one. And I did this, I think in like early part of the year or something. I don't remember. Or late last year. It was a year ago. And I don't know where the chart is anymore, so don't ask me for it. If you don't have it, man, too bad. Right, so what I think we're doing right now, the reason I'm comparing it to the areas that I'm comparing it to, the reason I'm comparing it to this area right here, the reason I'm comparing it to this area right here is because I think those are the correct comparisons. Like I think it's a bottom, you know, structure, as was this on a bigger wave. So like all three of these are great comparisons, but not all three of them broke to the upside. I think what we're going to see is it's some kind of combination of these three where you have some elements where it's going to break up because it's a big wave. I don't think it's going to be shallow, right? And you have other elements where maybe it doesn't, you know, like pieces of this do, pieces of it don't. Where you get these kind of, what I'm saying is like at the end of it all, if this were to continue in the same exact pattern that it has been continuing, then I hate to say this, but the ultimate end goal here, if this were to continue doing the exact same thing, never changed, yada, 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 then you would have to just conclude that if it just kind of indefinitely kept going, that this would just be in for like a super, super long eventual distribution down to like 1 here. Like as this setup progresses, you would eventually end up coming back to like $1. So something's got to give. And I think that's where this comes in. This is not a build out that necessarily goes down to $1, though perhaps it could have some downside at the very end, which is kind of what we're talking about right here. You need that bounce. You don't want to just kind of lay up here. You want to go back down sharply, back up sharply, and then you want to push all the way up. And once you do that, I think that's the big picture here, really. Once you do that, you're like good to go. You're outside the creek. You're not at risk of falling into this wave trap anymore. And now you're on like a much bigger, massive wave, right? Which we've already talked about extensively as a trend, which is very present and evident. Regardless of what anyone tells you, there's definitely a trend right here. Okay, so I'm like, yeah, it makes sense to me that that would happen and that we'd end up back up there in 2026. Or I say by 2026, because it may end up being end of 2025. So everything else from that point forward is just noise to get there. And if you're wondering, like, this is basically the same move that we already made, you know, to some degree. And if we come back down later as opposed to earlier, it may even be like a softer, in some ways like a softer move, but it'd be like a less volatile downward side. This was really steep downside after it hit that peak. So something like that happening again isn't out of the question. I'm giving it a lot of space here if it goes out to March, more so than my other chart. Because my other chart, I still think the other chart may end up proving right, and it goes up to like 8 or something, and then it just dumps right back down. This actually gives it a lot more time to react down here and trade the bottom, as opposed to time trading up here, you know, which is kind of weird. It's a completely different chart in some ways. You're like, well, which one is it? I don't know. It just depends on where they want to, where they find the most liquidity and where they want to trade. But yeah, this could give you a huge amount of space to trade sort of this other area down bottom. More like that. Okay, so big picture, right? GME did not make its advancement today. I didn't really look at it much. I drew this out early in the day. I felt like this was the most likely thing to happen. I stuck to my guns on it, and that's what's going on. I'm not particularly concerned unless it can't get back above this 29, like 38 area. And if it drops significantly low, it could mean that this creek is lost. That could be bad. You know, every time this happens, there always like a possibility it goes a little below, because that's just like a wick line. Like there's off 2 wicks here. You know, the body of the candles is a stronger building base for those creeks. So like, if it comes down to like 27.95, I wouldn't be freaking out about it. Anything above that's fine too, but there's a little space right here for some leeway. And then I would expect it to kind of ramp back up, potentially going into late December if it can hold. So it's looking really good right now. I don't see any major issues with it. AMC didn't do anything horrible today. It just kind of held its level. We spent a lot of time making another messy chart to demonstrate a different possibility, a different outcome. But I got to say, like, in the grand scheme of things, you know, either outcome is basically the same idea. Like you're sort of doing like one thing and changing it up a little bit to get to the other. And honestly, I don't find them to be that dissimilar. Like they are all pretty similar. You're essentially like building out a structure here for an M cross that then you jump over and come down. And you do the same thing here, you would just do it underneath the creek, and then you jump it later and just go up. That's kind of more what happened back here, is like stayed low and then it came up later, as opposed to like coming above it and then coming back down. Both are the same though. Like at the end of the day, you're going to make the jump, you're going to hold that creek, you both would come back low. I can't really make an argument that they're that different, even though they may seem really different to you. This is way stronger, in my opinion. The way this is happening is way stronger than it was back here. So if you're put off by this comparison that I made to 2022, don't be. We made the same comparison to 2021 August area as we did over here, because it's the same bottom, basically. And they basically gave us the same conclusion, you know, which is that there's a strong enough chance that that does work out and it gets us to a March high. Both of them had the same conclusion because I think they're possibilities. But it's the road taken, right, that matters. So the road not taken could still be there, a road that did exist. The computer might have this in its brain, its weird computer brain, that this could happen and we could make this work. We would just trade up here for liquidity, whatever. Like, we don't know the brain of the algorithms or whatever that run the market. We can see their footprints in the... There was only one footprint in the sand, and it was the BlackRock computer. Pretty much. And I'm just like... I feel like what we're doing is we're kind of analyzing those footprints, and we're seeing like that's the direction that... It's like a forensic accountant or something. Like you're looking at the direction of the flow, like the movement of the chart. That's what I excel in. I'm not really good at everything else, like options chain, fundamentals, all that other stuff. All that other stuff is great. You should use it. It could definitely impact the direction. But these things to me are fairly similar. Like I said, fairly similar. Like it's not really that different from what we had talked about before. It's just not. It looks pretty similar to what we talked about on the other chart. So then we just really have to determine what happens if it gets up there, you know? And that's, again, not happened yet, but a lot of if-then statements, right? Yeah. I think that what it boils down to here is a matter of consistency. Like, is it consistent with what we see in AMC? Does it consistently do things like this? Is there a behavior pattern that operators have used that's really similar that would lead us to conclude that in the next 20 days we could be way up here? Yeah. So bottom line on AMC, okay? If it drops through the 430s down to like 425, I would be concerned. But if it does not, then I think the build out here demands just the simplest explanation we can give it. And I'm going to go on a limb and say that I think that what we did today was really, really what's the word? I think it was constructive. It may not feel that way to you, but I feel that way. Like, I feel a lot better about it because I'm looking at it now like, okay, now I have an expectation for maybe how this might pan out. And I'm thinking about how that looked on RSI. I'm thinking about what that looked like on all those things. So no, I don't think we're going to go to 20 before it drops. That's my opinion, though. So yeah, I didn't really focus on any small scale stuff for AMC, but it's there. We talked about this. I don't know for a fact that this isn't going to drop again. What confused me about the small scale today and what I ended up deleting and not using much today was this initial drop-in value is really steep. And normally, though not always, this could actually indicate like the halfway point for the move, which would suggest we can come significantly lower. If it does not, it still matters because it's the level that we're going to have to beat on the way out. So that's why I was saying like 461 is still like the magic number here. It still matters a lot, right? And my thought is if we jump 461, I can't say these kind of things with like 1000% certainty, but like my thought is if we jump 461 by Monday, the 16th, I think it's off to the races. My expectation here would be some kind of a build out like this, and then you'd basically have like a walk up, and then it would break out and then just go. That's best case scenario that doesn't go any lower. Like I said, I didn't really look at the tiny price action. Tiny price action, so tiny, so cute. How does Arnold Schwarzenegger say cute? I don't know. So cute. It's tiny. It's cute. It's like a little squishy. I get you between my fingers and squish, squish. That looks right. So there's a there's a good chance that's correct. That I'm right, is what I'm trying to say. You guys are like, what? Booksy, you can't possibly know that. No, I can. Screw you. Screw you and your doubt. I have seen it enough. If it's going to break to the upside, this is basically what it looks like. It's right where it should be. That angle would define the rest of this structure right there. Like 1000% it will. Yep. It will. I'm positive. This guy's never right. Put him in a body bag. Sweep the leg. Oh, jeez. Put him in a body bag. Yeah. I think that guy died. They did some kind of like a... they did something for him. Because I remember there was something on Cobra Kai. It was like, rest in peace, so-and-so. And I was like, isn't that the guy that was like, put him in a body bag? I was like, geez. Now he's in a body bag. Booksy. Jeez. No respect for the dead. I'm just kidding. Gosh, dark. Yeah, no, he passed away. I'm sure he was like an old man, doing old man things. He wasn't he wasn't in like a martial arts tournament, you know. Gosh. Man, I'm gonna regret saying that later. You're gonna end up in a body bag too, Booksy. Yeah, maybe. Hopefully not. I think that the idea of a body bag is scary. It's like you got murdered or something, I don't like that. They don't put people in body bags usually unless it's like an accident or murder or something. They're just trying to get you out of there. Ugh. Yeah, so this is what I would expect. We may even see some kind of crazy gap up type motion going into Thursday or Friday. I would not be surprised. Yep. I'm like really sure about this. I don't know about the downside. That's the only thing I would be like, I'm not sure. Booksy, you just said you're really sure. Yeah, but downside's tricky because this is it's kind of flat. Like it may need to come down for a spring, like low to 430, which I know I said I didn't want that, but I think it's still above this is really where the creek jump happened. I'm having flashbacks to August. It's pretty low. I thought it was up here, but I'm not sure. I guess it could be either one. Yeah, it doesn't matter. It's checking the creek, okay? So if it can hold that and it reacts really strongly and goes up to like 461, everybody can be like, hey, that's kind of what we were thinking might happen. And then you can go back and look at it and see if it does this finishing motion. This would be very significant. I'm not positive it crosses here, but I think because of where this middle one is, that's where I would place it. It plays it almost like music across this. It really does. So the buy-in, if there is one, is like if it makes this advancement over 450 or this advancement, it'd be like this pocket region right here. And then it's just going. It's Monday the 16th. It may even go significantly higher here. I've got it going kind of low, but it could end up being like a really huge pop, like all the way up to that top even. It's not out of the question. I think it's possible. And then it would come back down and then break out again and go. And then, and then it's just like off to the races, kind of. It's gonna, if it's what I think it is, it's gonna double this value. Like it's gonna go to like 715 or something, like pretty fast. Booksy's crazy, I know, but that would be the big move for the year. It may not be that fast. Maybe a little bit slower, Booksy. Probably out until like the 30th or something. I think it's going to go. I think it's going to get there. I think this to me is a big evidence also, this kind of these trajectories. We already talked about these a little bit, but like it's a big deal that these trajectories are kind of pointing to that same area that you're expecting on a 50-50 turn here. Like it's widening enough to give you the correct, it's like just enough, right? Widening just enough to give you the correct measurement for like a double move up. And then the idea of that being what it is. I think then it's a question of, does it hold here and go again? And that's the second part. So like part one would be over probably by the end of December. I mean, I've got no reason to think it would go any farther. Even if it took till the 19th to break and doesn't hit there, but it pivots there, I really have no reason to think it would take any longer than the end of December, because none of the other guides that we've made have showed beyond that. So that move goes up. I don't really want to do like an arc, but I guess you could do like a V shape here if you want. It ended up being like really violent. So it would go like through here to like 64 degrees, and then you'd go back up like 64 degrees. But you do it from the opposite side, like wherever this popped. So this would end up being a good indicator of like maybe where it gets there. It's not super, super fast. It's pretty fast. Yeah, that's pretty fast. So maybe more like over here. Even though that angle is pointing really high. I don't know. That's a tough one. I don't really like trying to time it perfectly. It's hard. But at least for now, what seems to me is that that breakout happens right there on the 17th or thereabouts, and then comes above. I've got it going like straight up. I don't have any kind of chatter here, but there could be some chatter down bottom, and then it could go up. That might be part of the reason why this looks the way it does. And then we've got an intersection really early on like the 19th, which would be one crazy week. Or at the very least, I think that there's a likelihood that this builds out till like basically Christmas. That was another one that came up, was like the 20, and that's roughly right, because that's like roughly that angle, which is more accurate for like a ascending whatever. I guess it's possible this could delay until like Wednesday, breakout Wednesday instead, what I'm saying. Like it could pop here and then come back and not break out until Friday. I don't know. Not break out till here, you know, Wednesday, Thursday, but whatever. We'll see what they want to, where we want to trade if this happens. It's a big if anyways. I'm just drawing lines on a chart saying that I think it's going to happen. So, all right, I'm done, guys. I'm done. Throwing my towel in. We got 55%. That's about right. Everybody's just guessing. 55 people ending the stream. 55% think the bottom's in. Perfect. Good numbers. I'm going to go now. I got to feed my kitties and do the rest of the day. But you guys have a good one, and I will talk to you later.